wiped out the debt entirely, but I had a small credit balance besides. I think I could have run that up without much trouble, for the market was right, but he said to me, "I have bought you 10,000 shares of Southern Atlantic." That was another road controlled by his brother-in-law, Alvin Marquand, who also ruled the market destinies of the stock. When a man does for you what Dan Williamson did for me, you can't say anything but thank you, no matter what your market views may be. You may be sure you're right. But as Pat Hearn used to say, you can't tell till you bet, and Dan Williamson had bet for me with his money. Well, Southern Atlantic went down and stayed down, and I lost, I forget how much, on my 10,000 shares before Dan sold me out. I owed him more than ever. But you never saw a nicer or less importunate creditor in your life. Never a whimper from him. Instead, encouraging words and admonitions not to worry about it. In the end, the loss was made up for me in the same generous but mysterious way. He gave no details whatever. They were all numbered accounts. Dan Williamson would just say to me, "We made up your Southern Atlantic loss with profits on this other deal." And he'd tell me how he had sold 7,500 shares of some other stock and made a nice thing out of it. I can truthfully say that I never knew a blessed thing about those trades of mine until I was told that the indebtedness was wiped out. After that happened several times, I began to think, and I got to look at my case from a different angle. Finally, I tumbled. It was plain that I had been used by Dan Williamson. It made me angry to think it, but still angrier that I had not tumbled to it quicker. As soon as I had gone over the whole thing in my mind, I went to Dan Williamson, told him I was through with the firm, and I quit the office of Williamson and Brown. I had no words with him or any of his partners. What good would that have done me? But I will admit that I was sore at myself quite as much as at Williamson and Brown. 142. Reminiscences of a stock operator. The loss of the money didn't bother me. Whenever I have lost money in the stock market, I have always considered that I have learned something, that if I have lost money I have gained experience, so that the money really went for a tuition fee. A man has to have experience and he has to pay for it. But there was something that hurt a whole lot in that experience of mine in Dan Williamson's office, and that was the loss of a great opportunity. The money a man loses is nothing, he can make it up. But opportunities such as I had then do not come every day. The market, you see, had been a fine trading market. I was right, I was reading it accurately. The opportunity to make millions was there. But I allowed my gratitude to interfere with my play. I tied my own hands. I had to do what Dan Williamson in his kindness wished done. Altogether, it was more unsatisfactory than doing business with a relative bad business. And that wasn't the worst thing about it. It was that after that there was practically no opportunity for me to make big money. The market flattened out. Things drifted from bad to worse. I not only lost all I had but got into debt again more heavily than ever. Those were long lean years, 1911, 1912, 1913 and 1914. There was no money to be made. The opportunity simply wasn't there, and so I was worse off than ever. It isn't uncomfortable to lose when the loss is not accompanied by a poignant vision of what might have been. That was precisely what I could not keep my mind from dwelling on, and of course it unsettled me further. I learned that the weaknesses to which a speculator is prone are almost numberless. It was proper for me as a man to act the way I did in Dan Williamson's office, but it was improper and unwise for me as a speculator to allow myself to be influenced by any consideration to act against my own judgment. Noblesse oblige, but not in the stock market, because the tape is not chivalrous and, moreover, does not reward loyalty. I realized that I couldn't have acted differently. I couldn't make myself over just because I wished to trade in the stock market. But business is business always, and my business as a speculator is to back my own judgment always. It was a very curious experience. I'll tell you what I think happened. Dan Williamson was perfectly sincere in what he told me when he first saw me. Every time his firm did a few thousand shares in any one stock, the street jumped at the conclusion that Alvin Marquand was buying or selling. He was the big trader of the office, to be sure, and he 143. Reminiscences of a Stock Operator gave this firm all his business. And he was one of the best and biggest traders they have ever had in Wall Street. Well, I was to be used as a smokescreen, particularly for Marquand's selling. Alvin Marquand fell sick shortly after I went in. His ailment was early diagnosed as incurable, and Dan Williamson of course knew it long before Marquand himself did. That is why Dan covered my Chesapeake and Atlantic stock. He had begun to liquidate some of his brother-in-law's speculative holdings of that and other stocks. Of course, when Marquand died, the estate had to liquidate his speculative and semi-speculative lines, and by that time we had run into a bear market. By tying me up the way he did, Dan was helping the estate a whole lot. I do not speak boastfully when I say that I was a very heavy trader and that I was dead right in my views on the stock market. I know that Williamson remembered my successful operations in the bear market of 1907, and he couldn't afford to run the risk of having me at large. Why, if I had kept on the way I was going, I'd have made so much money that by the time he was trying to liquidate part of Alvin Marquand's estate, I would have been trading in hundreds of thousands of shares. As an active bear, I would have done damage running into the millions of dollars to the Marquand heirs, for Alvin left only a little over a couple of $100 million. It was much cheaper for them to let me get into debt and then to pay off the debt than to have me in some other office operating actively on the bear side. That is precisely what one would have been doing but for my feeling that I must not be outdone in decency by Dan Williamson. I have always considered this the most interesting and most unfortunate of all my experiences as a stock operator. As a lesson, it cost me a disproportionately high price. It put off the time of my recovery several years. I was young enough to wait with patience for the strayed millions to come back. But 5 years is a long time for a man to be poor. Young or old, it is not to be relished. I could do without the yachts a great deal easier than I could without a market to come back on. The greatest opportunity of a lifetime was holding before my very nose the purse I had lost. I could not put out my hand and reach for it. A very shrewd boy, that Dan Williamson, as slick as they make them. Far-sighted, ingenious, daring. He is a thinker, has imagination, detects the vulnerable spot in any man and can plan cold-bloodedly to hit it. He did his own sizing up and soon. 144. Reminiscences of a Stock Operator doped out just what to do to me in order to reduce me to complete inoffensiveness in the market. He did not actually do me out of any money. On the contrary, he was to all appearances extremely nice about it. He loved his sister, Mrs. Marquand, and he did his duty toward her as he saw it. 145. Reminiscences of a Stock Operator. Chapter 14. It has always rankled in my mind that after I left Williamson and Brown's office, the cream was off the market. We ran smack into a long moneyless period, for mighty lean years. There was not a penny to be made. As Billy Henrique once said, it was the kind of market in which not even a skunk could make a cent. It looked to me as though I was in touch with destiny. It might have been the plan of Providence to chasten me, but really I had not been filled with such pride as called for a fall. I had not committed any of those speculative sins which a trader must expiate on the debtor side of the account. I was not guilty of a typical sucker play. What I had done, or, rather, what I had left undone, was something for which I would have received praise and not blame north of 42nd Street. In Wall Street it was absurd and costly. But by far the worst thing about it was the tendency it had to make a man a little less inclined to permit himself human feelings in the ticker district. I left Williamson's and tried other brokers' offices. In every one of them I lost money. It served me right, because I was trying to force the market into giving me what it didn't have to give, to wit, opportunities for making money. I did not find any trouble in getting credit, because those who knew me had faith in me. You can get an idea of how strong their confidence was when I tell you that when I finally stopped trading on credit I owed well over $1 million. The trouble was not that I had lost my grip, but that during those 4 wretched years the opportunities for making money simply didn't exist. Still I plugged along, trying to make a stake and succeeding only in increasing my indebtedness. After I ceased trading on my own hook because I wouldn't owe my friends any more money, I made a living handling accounts for people who believed I knew the game well enough to beat it even in a dull market. For my services, I received a percentage of the profits when there were any. That 146 Reminiscences of a Stock Operator is how I lived. Well, say that is how I sustained life. Of course, I didn't always lose, but I never made enough to allow me materially to reduce what I owed. Finally, as things got worse, I felt the beginnings of discouragement. For the first time in my life, everything seemed to have gone wrong with me. I did not go about bewailing the descent from millions and yachts to debts and the simple life. I didn't enjoy the situation. But I did not fill up with self-pity. I did not propose to wait patiently for time and Providence to bring about the cessation of my discomforts. I therefore studied my problem. It was plain that the only way out of my troubles was by making money. To make money I needed merely to trade successfully. I had so traded before and I must do so once more. More than once in the past I had run up a shoestring into hundreds of thousands. Sooner or later the market would offer me an opportunity. I convinced myself that whatever was wrong with me and not with the market. Now what could be the trouble with me? I asked myself that question in the same spirit in which I always studied the various phases of my trading problems. I thought about it calmly and came to the conclusion that my main trouble came from worrying over the money I owed. I was never free from the mental discomfort of it. I must explain to you that it was not the mere consciousness of my indebtedness. Any businessman contracts debts in the course of his regular business. Most of my debts were really nothing but business debts, due to what were unfavorable business conditions for me. And no worse than a merchant suffers from, for instance, when there is an unusually prolonged spell of unseasonable weather. Of course, as time went on and I could not pay, I began to feel less philosophical about my debts. I'll explain. I owed over $1 million, all of it stock market losses. Remember, most of my creditors were very nice and didn't bother me, but there were 2 who did bedevil me. They used to follow me around every time I made a winning. Each of them was Johnny on the spot, wanting to know all about it and insisting on getting theirs right off. One of them, to whom I owed $800, threatened to sue me, seize my furniture, and so forth. I can't conceive why he thought I was concealing assets, unless it was that I didn't quite look like a stage hobo about to die of destitution. As I studied the problem, I saw that it wasn't a case that called for reading the tape but for reading my own self. I quite cold-bloodedly reached the conclusion that I would 147. Reminiscences of a stock operator. Never be able to accomplish anything useful so long as I was worried, and it was equally plain that I should be worried so long as I owed money. I mean, as long as any creditor had the power to vex me or to interfere with my coming back by insisting upon being paid before I could get a decent stake together. This was all so obviously true that I said to myself, I must go through bankruptcy. What else could relieve my mind? It sounds both easy and sensible, doesn't it? But it was more than unpleasant, I can tell you. I hated to do it. I hated to put myself in a position to be misunderstood or misjudged. I myself never cared much for money. I never thought enough of it to consider it worthwhile lying for. But I knew that everybody didn't feel that way. Of course, I also knew that if I got on my feet again, I'd pay everybody off, for the obligation remained. But unless I was able to trade in the old way, I'd never be able to pay back that million. I nerved myself and went to see my creditors. It was a mighty difficult thing for me to do, for all that most of them were personal friends or old acquaintances. I explained the situation quite frankly to them. I said, I am not going to take this step because I don't wish to pay you, but because, in justice to both myself and you, I must put myself in a position to make money. I have been thinking of this solution off and on for over 2 years, but I simply didn't have the nerve to come out and say so frankly to you. It would have been infinitely better for all of us if I had. It all simmers down to this. I positively cannot be my old self while I am harassed or upset by these debts. I have decided to do now what I should have done a year ago. I have no other reason than the one I have just given you. What the first man said was to all intents and purposes what all of them said. He spoke for his firm. Livingston, he said, we understand. We realize your position perfectly. I'll tell you what we'll do, we'll just give you a release. Have your lawyer prepare any kind of paper you wish, and we'll sign it. That was in substance what all my big creditors said. That is one side of Wall Street for you. It wasn't merely careless good nature or sportsmanship. It was also a mighty intelligent decision, for it was clearly good business. I appreciated both the goodwill and the business gumption. 148. Reminiscences of a stock operator. These creditors gave me a release on debts amounting to over $1 million. But there were the 2 minor creditors who wouldn't sign off. One of them was the $800 man I told you about. I also owed $60,000 to a brokerage firm which had gone into bankruptcy. And the receivers, who didn't know me from Adam, were on my neck early and late. Even if they had been disposed to follow the example set by my largest creditors, I don't suppose the court would have let them sign off. At all events, my schedule of bankruptcy amounted to only about $100,000, though, as I said, I owed well over $1 million. It was extremely disagreeable to see the story in the newspapers. I had always paid my debts in full, and this new experience was most mortifying to me. I knew I'd pay off everybody someday if I lived, but everybody who read the article wouldn't know it. I was ashamed to go out after I saw the report in the newspapers. But it all wore off presently, and I cannot tell you how intense was my feeling of relief to know that I wasn't going to be harried anymore by people who didn't understand how a man must give his entire mind to his business if he wishes to succeed in stock speculation. My mind now being free to take up trading with some prospect of success, unvexed by debts, the next step was to get another stake. The stock exchange had been closed from July 31st to the middle of December 1914, and Wall Street was in the dumps. There hadn't been any business whatever in a long time. I owed all my friends. I couldn't very well ask them to help me again just because they had been so pleasant and friendly to me, when I knew that nobody was in a position to do much for anybody. It was a mighty difficult task, getting a decent stake, for with the closing of the stock exchange there was nothing that I could ask any broker to do for me. I tried in a couple of places. No use. Finally, I went to see Dan Williamson. This was in February 1915. I told him that I had rid myself of the mental incubus of debt and I was ready to trade as of old. You will recall that when he needed me, he offered me the use of $25,000 without my asking him. Now that I needed him, he said, when you see something that looks good to you and you want to buy 500 shares, go ahead and it will be all right. I thanked him and went away. He had kept me from making a great deal of money and 149. Reminiscences of a stock operator. The office had made a lot in commissions from me. I admit I was a little sore to think that Williamson and Brown didn't give me a decent stake. I intended to trade conservatively at first. It would make my financial recovery easier and quicker if I could begin with a line a little better than 500 shares. But, anyhow, I realized that, such as it was, there was my chance to come back. I left Dan Williamson's office and studied the situation in general and my own problem in particular. It was a bull market. That was as plain to me as it was to thousands of traders. But my stake consisted merely of an offer to carry 500 shares for me. That is, I had no leeway, limited as I was. I couldn't afford even a slight setback at the beginning. I must build up my stake with my very first play. That initial purchase of mine of 500 shares must be profitable. I had to make real money. I knew that unless I had sufficient trading capital, I would not be able to use good judgment. Without adequate margins, it would be impossible to take the cold-blooded, dispassionate attitude toward the game that comes from the ability to afford a few minor losses, such as I often incurred in testing the market before putting down the big bet. I think now that I found myself then at the most critical period of my career as a speculator. If I failed this time, there was no telling where or when, if ever, I might get another stake for another try. It was very clear that I simply must wait for the exact psychological moment. I didn't go near Williamson and Brown's. I purposely kept away from them for 6 long weeks of steady tape reading. I was afraid that if I went to the office, knowing that I could buy 500 shares, I might be tempted into trading at the wrong time or in the wrong stock. A trader, in addition to studying basic conditions, remembering market precedents and keeping in mind the psychology of the outside public as well as the limitations of his brokers, must also know himself and provide against his own weaknesses. There is no need to feel anger over being human. I have come to feel that it is as necessary to know how to read myself as to know how to read the tape. I have studied and reckoned on my own reactions to given impulses or to the inevitable temptations of an active market, quite in the same mood and spirit as I have considered crop conditions or analyzed reports of earnings. So day after day, broke and anxious to resume trading, I sat in front of a quotation board in another broker's office where I couldn't buy or sell as much as 1 share of stock. 150. Reminiscences of a stock operator. Studying the market, not missing a single transaction on the tape, watching for the psychological moment to ring the full speed ahead bell. By reason of conditions known to the whole world, the stock one was most bullish on in those critical days of early 1915 was Bethlehem Steel. I was morally certain it was going way up, but in order to make sure that I would win on my very first play, as I must, I decided to wait until it crossed par. I think I have told you it has been my experience that whenever a stock crosses 100 or 200 or 300 for the first time, it nearly always keeps going up for 30 to 50 points and after 300 faster than after 100 or 200. One of my first big coups was in Anaconda, which I bought when it crossed 200 and sold a day later at 260. My practice of buying a stock just after it crossed par dated back to my early bucket shop days. It is an old trading principle. You can imagine how keen I was to get back to trading on my old scale. I was so eager to begin that I could not think of anything else, but I held myself in leash. I saw Bethlehem Steel climb every day, higher and higher, as I was sure it would, and yet there I was checking my impulse to run over to Williamson and Brown's office and buy 500 shares. I knew I simply had to make my initial operation as nearly a cinch as was humanly possible. Every point that stock went up meant $500 I had not made. The first 10 points advance meant that I would have been able to pyramid, and instead of 500 snares, I might now be carrying 1,000 shares that would be earning for me $1,000 a point. But I sat tight, and instead of listening to my loud mouthed hopes or to my clamorous beliefs, I heeded only the level voice of my experience and the counsel of common sense. Once I got a decent stake together, I could afford to take chances. But without a stake, taking chances, even slight chances, was a luxury utterly beyond my reach. 6 weeks of patience, but, in the end, a victory for common sense over greed and hope. I really began to waver and sweat blood when the stock got up to 90. Think of what I had not made by not buying when I was so bullish. Well, when it got to 98, I said to myself, Bethlehem is going through 100, and when it does, the roof is going to blow clean off. The tape said the same thing more than plainly. In fact, it used a megaphone. I tell you, I saw 100 on the tape when the ticker was only printing 151. Reminiscences of a Stock Operator. 98, and I knew that wasn't the voice of my hope or the sight of my desire, but the assertion of my tape-reading instinct. So I said to myself, I can't wait until it gets through 100. I have to get it now. It is as good as gone through par. I rushed to Williamson and Brown's office and put in an order to buy 500 shares of Bethlehem Steel. The market was then 98. I got 500 shares at 98 to 99. After that, she shot right up and closed that night, I think, at 114 or 115. I bought 500 shares more. The next day Bethlehem Steel was 145 and I had my stake. But I earned it. Those 6 weeks of waiting for the right moment were the most strenuous and wearing 6 weeks I ever put in. But it paid me, for I now had enough capital to trade in fair-sized lots. I never would have got anywhere just on 500 shares of stock. There is a great deal in starting right, whatever the enterprise may be, and I did very well. After my Bethlehem deal, so well, indeed, that you would not have believed it was the selfsame man trading. As a matter of fact, I wasn't the same man, for where I had been harassed and wrong, I was now at ease and right. There were no creditors to annoy and no lack of funds to interfere with my thinking or with my listening to the truthful voice of experience, and so I was winning right along. All of a sudden, as I was on my way to a sure fortune, we had the Lusitania break. Every once in a while a man gets a crack like that in the solar plexus, probably that he may be Reminded of the sad fact that no human being can be so uniformly right on the market as to be beyond the reach of unprofitable accidents. I have heard people say that no professional speculator need have been hit very hard by the news of the torpedoing of the Lusitania, and they go on to tell how they had it long before the street did. I was not clever enough to escape by means of advance information, and all I can tell you is that on account of what I lost through the Lusitania break and one or two other reverses that I wasn't wise enough to foresee, I found myself at the end of 1915 with a balance at my brokers of about $140,000. That was all I actually made, though I was consistently right on the market throughout the greater part of the year. I did much better during the following year. I was very lucky. I was rampantly bullish in a wild bull market. Things were certainly coming my way so that there wasn't anything to do but to make money. It made me remember a saying of the late H. Rogers, of the Standard Oil Company, to the effect that there were times when a man could no more. 152. Reminiscences of a stock operator. Help making money than he could help getting wet if he went out in a rainstorm without an umbrella. It was the most clearly defined bull market we ever had. It was plain to everybody that the Allied purchases of all kinds of supplies here made the United States the most prosperous nation in the world. We had all the things that no one else had for sale, and we were fast getting all the cash in the world. I mean that the wide world's gold was pouring into this country in torrents. Inflation was inevitable, and, of course, that meant rising prices for everything. All this was so evident from the first that little or no manipulation for the rise was needed. That was the reason why the preliminary work was so much less than in other bull markets. And not only was the war bride boom more naturally developed than all others, but it proved unprecedentedly profitable for the general public. That is, the stock market winnings during 1915 were more widely distributed than in any other boom in the history of Wall Street. That the public did not turn all their paper profits into good hard cash, or that they did not long keep what profits they actually took, was merely history repeating itself. Nowhere does history indulge in repetitions so often or so uniformly as in Wall Street. When you read contemporary accounts of booms or panics, the one thing that strikes you most forcibly is how little either stock speculation or stock speculators today differ from yesterday. The game does not change, and neither does human nature. I went along with the rise in 1916. I was as bullish as the next man, but of course I kept my eyes open. I knew, as everybody did, that there must be an end, and I was on the watch for warning signals. I wasn't particularly interested in guessing from which quarter the tip would come, and so I didn't stare at just one spot. I was not, and I never have felt that I was, wedded indissolubly to one or the other side of the market. That a bull market has added to my bank account or a bear market has been particularly generous I do not consider sufficient reason for sticking to the bull or the bear side after I receive the get-out warning. A man does not swear eternal allegiance to either the bull or the bear side. His concern lies with being right. And there is another thing to remember, and that is that a market does not culminate in one grand blaze of glory. Neither does it end with a sudden reversal of form. A market can and does often cease to be a bull market long before prices generally begin to break. My long-expected warning came to me when I noticed that, one after another, those stocks which had been the leaders of the market reacted several points from the top end. 153. Reminiscences of a stock operator. For the first time in many months did not come back. Their race evidently was run, and that clearly necessitated a change in my trading tactics. It was simple enough. In a bull market, the trend of prices, of course, is decidedly and definitely upward. Therefore, whenever a stock goes against the general trend, you are justified in assuming that there is something wrong with that particular stock. It is enough for the experienced trader to perceive that something is wrong. He must not expect the tape to become a lecturer. His job is to listen for it to say get out, and not wait for it to submit a legal brief for approval. As I said before, I noticed that stocks which had been the leaders of the wonderful advance had ceased to advance. They dropped 6 or 7 points and stayed there. At the same time, the rest of the market kept on advancing under new standard bearers. Since nothing wrong had developed with the companies themselves, the reason had to be sought elsewhere. Those stocks had gone with the current for months. When they ceased to do so, though the bull tide was still running strong, it meant that for those particular stocks the bull market was over. For the rest of the list, the tendency was still decidedly upward. There was no need to be perplexed into inactivity, for there were really no cross currents. I did not turn bearish on the market then, because the tape didn't tell me to do so. The end of the bull market had not come, though it was within hailing distance. Pending its arrival, there was still bull money to be made. Such being the case, I merely turned bearish on the stocks which had stopped advancing, and as the rest of the market had rising power behind it, I both bought and sold. The leaders that had ceased to lead I sold. I put out a short line of 5,000 shares in each of them, and then I went long of the new leaders. The stocks I was short of didn't do much, but my long stocks kept on rising. When finally these in turn ceased to advance, I sold them out and went short 5,000 shares of each. By this time I was more bearish than bullish, because obviously the next big money was going to be made on the downside. While I felt certain that the bear market had really begun before the bull market had really ended, I knew the time for being a rampant bear was not yet. There was no sense in being more royalist than the king, especially in being so too soon. The tape merely said that patrolling parties from the main bear army had dashed by. Time to get ready. 154. Reminiscences of a stock operator. I kept on both buying and selling until after about a month's trading I had out a short line of 60,000 shares, 5,000 shares each in a dozen different stocks which earlier in the year had been the public's favorites because they had been the leaders of the great bull market. It was not a very heavy line, but don't forget that neither was the market definitely bearish. Then one day the entire market became quite weak and prices of all stocks began to fall. When I had a profit of at least 4 points in each and every one of the 12 stocks that I was short of, I knew that I was right. The tape told me it was now safe to be bearish, so I promptly doubled up. I had my position. I was short of stocks in a market that now was plainly a bear market. There wasn't any need for me to push things along. The market was bound to go my way, and, knowing that, I could afford to wait. After I doubled up, I didn't make another trade for a long tune. About 7 weeks after I put out my full line, we had the famous leak, and stocks broke badly. It was said that somebody had advance news from Washington that President Wilson was going to issue a message that would bring back the dove of peace to Europe in a hurry. Of course, the war bride boom was started and kept up by the World War, and peace was a bare item. When one of the cleverest traders on the floor was accused of profiting by advance information, he simply said he had sold stocks not on any news but because he considered that the bull market was overripe. I myself had doubled my line of shorts 7 weeks before. On the news, the market broke badly and I naturally covered. It was the only play possible. When something happens on which you did not count when you made your plans it behooves you to utilize the opportunity that a kindly fate offers you. 4-1. Thing, on a bad break like that you have a big market, one that you can turn around in. And that is the time to turn your paper profits into real money. Even in a bear market, a man cannot always cover 120,000 shares of stock without putting up the price on himself. He must wait for the market that will allow him to buy that much at no damage to his profit as it stands him on paper. I should like to point out that I was not counting on that particular break at that particular time for that particular reason. But, as I have told you before, my experience of 30 years as a trader is that such accidents are usually along the line of least resistance on which I base my position in the market. Another thing to bear in mind is 155. Reminiscences of a stock operator. This, never try to sell at the top. It isn't wise. Sell after a reaction if there is no rally. I cleared about $3 million in 1916 by being bullish as long as the bull market lasted, and then by being bearish when the bear market started. As I said before, a man does not have to marry one side of the market till death do them part. That winter I went south, to Palm Beach, as I usually do for a vacation, because I am very fond of saltwater fishing. I was short of stocks and wheat, and both lines showed me a handsome profit. There wasn't anything to annoy me, and I was having a good time. Of course, unless I go to Europe, I cannot really be out of touch with the stock or commodities markets. 4. Instance, in the Adirondacks I have a direct wire from my broker's office to my house. In Palm Beach I used to go to my broker's branch office regularly. I noticed that cotton, in which I had no interest, was strong and rising. About that time, this was in 1917, I heard a great deal about the efforts that President Wilson was making to bring about peace. The reports came from Washington, both in the shape of press dispatches and private advices to friends in Palm Beach. That is the reason why one day I got the notion that the course of the various markets reflected confidence in Mr. Wilson's success. With peace supposedly close at hand, stocks and wheat ought to go down and cotton up. I was all set as far as stocks and wheat went, but I had not done anything in cotton in some time. At 2:20 that afternoon I did not own a single bale, but at 2:25 my belief that peace was impending made me buy 15,000 bales as a starter. I proposed to follow my old system of trading, that is, of buying my full line, which I have already described to you. That very afternoon, after the market closed, we got the unrestricted warfare note. There wasn't anything to do except to wait for the market to open the next day. I recall that at Gridley's that night one of the greatest captains of industry in the country was offering to sell any amount of United States steel at 5 points below the closing price. That afternoon, there were several Pittsburgh millionaires within hearing. Nobody took the big man's offer. They knew there was bound to be a whopping big break at the opening. Sure enough, the next morning the stock and commodity markets were in an uproar, as 156. Reminiscences of a stock operator. You can imagine. Some stocks opened 8 points below the previous night's close. 2. Me, that meant a heaven-sent opportunity to cover all my shorts profitably. As I said before, in a bear market it is always wise to cover if complete demoralization suddenly develops. That is the only way, if you swing a good-sized line, of turning a big paper profit into real money both quickly and without regrettable reductions. For instance, I was short 50,000 shares of United States Steel alone. Of course I was short of other stocks. And when I saw I had the market to cover in, I did. My profits amounted to about $1.5 million. It was not a chance to disregard. Cotton, of which I was long 15,000 bales, bought in the last half hour of the trading the previous afternoon, opened down 500 points. Some break. It meant an overnight loss of $375,000. While it was perfectly clear that the only wise play in stocks and wheat was to cover on the break, I was not so clear as to what I ought to do in cotton. There were various things to consider, and while I always take my loss the moment I am convinced I am wrong, I did not like to take that loss that morning. Then I reflected that I had gone south to have a good time fishing instead of perplexing myself over the course of the cotton market. And, moreover, I had taken such big profits in my wheat and in stocks that I decided to take my joss in cotton. I would figure that my profit had been a little more than 1 million instead of over 1.5 million. It was all a matter of bookkeeping, as promoters are apt to tell you when you ask too many questions. If I hadn't bought that cotton just before the market closed the day before, I would have saved that $400,000. It shows you how quickly a man may lose big money on a moderate line. My main position was absolutely correct, and I benefited by an accident of a nature diametrically opposite to the considerations that led me to take the position I did in stocks and wheat. Observe, please, that the speculative line of least resistance again demonstrated its value to a trader. Prices went as I expected, notwithstanding the unexpected market factor introduced by the German note. If things had turned out as I had figured, I would have been 100% right in all three of my lines, for with peace stocks and wheat would have gone down and cotton would have gone kiting up. I would have cleaned up in all three. Irrespective of peace or war, I was right in my position on the stock market and in wheat, and that is why the unlooked-for event helped. In cotton, I based my play on something that might happen outside of the 157 Reminiscences of a Stock Operator market, that is, I bet on Mr. Wilson's success in his peace negotiations. It was the German military leaders who made me lose the cotton bet. When I returned to New York early in 1917, I paid back all the money I owed, which was over $1 million. 16 was a great pleasure to me to pay my debts. I might have paid it back a few months earlier, but I didn't, for a very simple reason. I was trading actively and successfully, and I needed all the capital I had. I owed it to myself as well as to the men I considered my creditors to take every advantage of the wonderful markets we had in 1915 and 1916. I knew that I would make a great deal of money, and I wasn't worrying because I was letting them wait a few months longer for money many of them never expected to get back. I did not wish to pay off my obligations in driblets or to one man at a time, but in full to all at once. So as long as the market was doing all it could for me, I just kept on trading on as big a scale as my resources permitted. I wished to pay interest, but all those creditors who had signed releases positively refused to accept it. The man I paid off the last of all was the chap I owed the $800 to, who had made my life a burden and had upset me until I couldn't trade. I let him wait until he heard that I had paid off all the others. Then he got his money. I wanted to teach him to be considerate the next time somebody owed him a few hundreds. And that is how I came back. After I paid off my debts in full, I put a pretty fair amount into annuities. I made up my mind I wasn't going to be strapped and uncomfortable and minus a stake ever again. Of course, after I married, I put some money in trust for my wife. And after the boy came, I put some in trust for him. The reason I did this was not alone the fear that the stock market might take it away from me, but because I knew that a man will spend anything he can lay his hands on. By doing what I did, my wife and child are safe from me. More than one man I know has done the same thing, but has coaxed his wife to sign off when he needed the money, and he has lost it. But I have fixed it up so that no matter what I want or what my wife wants, that trust holds. It is absolutely safe from all attacks by either of us, safe from my market needs, safe even from a devoted wife's love. I'm taking no chances. 158. Reminiscences of a Stock Operator. Chapter 15. Among the hazards of speculation, the happening of the unexpected, I might even say of the unexpectable, ranks high. There are certain chances that the most prudent man is justified in taking, chances that he must take if he wishes to be more than a mercantile mollusk. Normal business hazards are no worse than the risks a man runs when he goes out of his house into the street or sets out on a railroad journey. When I lose money by reason of some development which nobody could foresee, I think no more vindicatively of it than I do of an inconveniently timed storm. Life itself from the cradle to the grave is a gamble, and what happens to me because I do not possess the gift of second sight I can bear undisturbed. But there have been times in my career as a speculator when I have both been right and played square, and nevertheless I have been cheated out of my earnings by the sordid unfairness of unsportsmanlike opponents, against misdeeds by crooks, cowards, and crowds. A quick-thinking or far-sighted businessman can protect himself. I have never gone up against downright dishonesty, except in a bucket shop or two, because even their honesty was the best policy. The big money was in being square and not in welshing. I have never thought it good business to play any game in any place where it was necessary to keep an eye on the dealer, because he was likely to cheat if unwatched. But against the whining welsher the decent man is powerless. Fair play is fair play. I could tell you a dozen instances where I have been the victim of my own belief in the sacredness of the pledged word or of the inviolability of a gentleman's agreement. I shall not do so because no useful purpose can be served thereby. Fiction writers, clergymen, and women are fond of alluding to the floor of the stock exchange as a boodler's battlefield, and to Wall Street's daily business as a fight. It is quite dramatic but utterly misleading. I do not think that my business is strife and contest. I never fight either individuals or speculative cliques. I merely differ in opinion. 159. Reminiscences of a Stock Operator. That is, in my reading of basic conditions, what playwrights call battles of business are not fights between human beings. They are merely tests of business vision. I try to stick to facts and facts only, and govern my actions accordingly. That is Bernard M. Baruch's recipe for success in wealth winning. Sometimes I do not see the facts all. The facts clearly enough or early enough, or else I do not reason logically. Whenever any of these things happen, I lose. I am wrong. And it always costs me money to be wrong. No reasonable man objects to paying for his mistakes. There are no preferred creditors in mistake-making, and no exceptions or exemptions. But I object to losing money when I am right. I do not mean either those deals that have cost me money because of sudden changes in the rules of some particular exchange. I have in mind certain hazards of speculation that from time to time remind a man that no profit should be counted safe until it is deposited in your bank to your credit. After the Great War broke out in Europe, there began the rise in the prices of commodities that was to be expected. It was as easy to foresee that as to foresee war. Inflation. Of course, the general advance continued as the war prolonged itself. As you may remember, I was busy coming back in 1915. The boom in stocks was there, and it was my duty to utilize it. My safest, easiest, and quickest big play was in the stock market, and I was lucky, as you know. By July 1917, I not only had been able to pay off all my debts but was quite a little too. The good besides. This meant that I now had the time, the money, and the inclination to consider trading in commodities as well as in stocks. For many years I have made it my practice to study all the markets. The advance in commodity prices over the pre-war level ranged from 100 to 400%. There was only one exception, and that was coffee. Of course, there was a reason for this. The breaking out of the war meant the closing up of European markets, and huge cargoes were sent to this country, which was the one big market. That led in time to an enormous surplus of raw coffee here, and that, in turn, kept the price low. Why, when I first began to consider its speculative possibilities, coffee was actually selling below pre-war prices. If the reasons for this anomaly were plain, no less plain was it that the active and increasingly efficient operation by the German and Austrian submarines must mean an appalling reduction in the number of ships available for commercial purposes. This eventually in turn must lead to dwindling imports of coffee, with reduced receipts and an unchanged 160. Reminiscences of a stock operator. Consumption. The surplus stocks must be absorbed, and when that happened, the price of coffee must do what the prices of all other commodities had done, which was go way up. It didn't require a Sherlock Holmes to size up the situation. Why everybody did not buy coffee I cannot tell you. When I decided to buy it, I did not consider it a speculation. It was much more of an investment. I knew it would take time to cash in, but I knew also that it was bound to yield a good profit. That made it a conservative investment. Operation: a banker's act rather than a gambler's play. I started my buying operations in the winter of 1917. I took quite a lot of coffee. The market, however, did nothing to speak of. It continued inactive, and as for the price, it did not go up as I had expected. The outcome of it all was that I simply carried my line to no purpose for 9 long months. My contracts expired then, and I sold out all my options. I took a whopping big loss on that deal, and yet I was sure my views were sound. I had been clearly wrong in the matter of time, but I was confident that coffee must advance as all commodities had done, so that no sooner had I sold out my line than I started in to buy again. I bought 3 times as much coffee as I had so unprofitably carried during those 9 disappointing months. Of course, I bought deferred options for as long a time as I could get. I was not so wrong now. As soon as I had taken on my trebled line, the market began to go up. People everywhere seemed to realize all of a sudden what was bound to happen in the coffee market. It began to look as if my investment was going to return me a mighty good rate of interest. The sellers of the contracts I held were roasters, mostly of German names and affiliations, who had bought the coffee in Brazil confidently expecting to bring it to this country. But there were no ships to bring it, and presently they found themselves in the uncomfortable position of having no end of coffee down there and being heavily short of it to me up here. Please bear in mind that I first became bullish on coffee while the price was practically at a pre-war level, and don't forget that after I bought it I carried it the greater part of a year and then took a big loss on it. The punishment for being wrong is to lose money. The reward for being right is to make money. Being clearly right and carrying a big line, I was justified in expecting to make a killing. It would not take much of an advance to make my profit satisfactory to me, for I was carrying several hundred. 161. Reminiscences of a stock operator. 1,000 bags. I don't like to talk about my operations in figures because sometimes They sound rather formidable and people might think I was boasting. As a matter of fact, I trade in accordance to my means and always leave myself an ample margin of safety. In this instance, I was conservative enough. The reason I bought options so freely was because I couldn't see how I could lose. Conditions were in my favor. I had been made to wait a year, but now I was going to be paid both for my waiting and for being right. I could see the profit coming fast. There wasn't any cleverness about it. It was simply that I wasn't blind. Coming sure and fast, that profit of millions. But it never reached me. No, it wasn't tracked by a sudden change in conditions. The market did not experience an abrupt reversal of form. Coffee did not pour into the country. What happened? The unexpected. What had never happened in anybody's experience, what I therefore had no reason to guard against. I added a new one to the long list of hazards of speculation that I must always keep before me. It was simply that the fellows who had sold me the coffee, the shorts, knew what was in store for them, and in their efforts to squirm out of the position into which they had sold themselves, devised a new way of welshing. They rushed to Washington for help, and got it. Perhaps you remember that the government had evolved various plans for preventing further profiteering in necessities. You know how most of them worked. Well, the philanthropic coffee shorts appeared before the price-fixing committee of the War Industries Board. I think that was the official designation, and made a patriotic appeal to that body to protect the American breakfaster. They asserted that a professional speculator, one Lawrence Livingston, had cornered, or was about to corner, coffee. If his speculative plans were not brought to naught, he would take advantage of the conditions created by the war, and the American people would be forced to pay exorbitant prices for their daily coffee. It was unthinkable to the patriots who had sold me cargoes of coffee. They couldn't find ships for that 100 millions of Americans, more or less, should pay tribute to conscienceless speculators. They represented the coffee trade, not the coffee gamblers, and they were willing to help the government curb profiteering, actual or prospective. Now I have a horror of whiners, and I do not mean to intimate that the price-fixing committee was not doing its honest best to curb profiteering and wastefulness. But that need not stop me from expressing the opinion that the committee could not have gone 162. Reminiscences of a stock operator. Very deeply into the particular problem of the coffee market. They fixed on a maximum price for raw coffee and also fixed a time limit for closing out all existing contracts. This decision meant, of course, that the coffee exchange would have to go out of business. There was only one thing for me to do, and I did it, and that was to sell out all my contracts. Those profits of millions that I had deemed as certain to come my way as any I ever made failed completely to materialize. I was and am as keen as anybody against the profiteer in the necessaries of life, but at the time the price-fixing committee made their ruling on coffee, all other commodities were selling at from 250 to 400% above pre-war prices, while raw coffee was actually below the average prevailing for some years before the war. I can't see that it made any real difference who held the coffee. The price was bound to advance, and the reason for that was not the operations of conscienceless speculators, but the dwindling surplus for which the diminishing importations were responsible, and they in turn were affected exclusively by the appalling destruction of the world's ships by the German submarines. The committee did not wait for coffee to start, they clamped on the brakes. As a matter of policy and of expediency, it was a mistake to force the coffee exchange to close just then. If the committee had let coffee alone, the price undoubtedly would have risen for the reasons I have already stated, which had nothing to do with any alleged corner. But the high price, which need not have been exorbitant, would have been an incentive to attract supplies to this market. I have heard Mr. Bernard M. Baruch say that the War Industries Board took into consideration this factor, the ensuring of a supply, in fixing prices. And for that reason, some of the complaints about the high limit on certain commodities were unjust. When the coffee exchange resumed business later on, coffee sold at 23 cents. The American people paid that price because of the small supply, and the supply was small because the price had been fixed too low, at the suggestion of philanthropic shorts, to make it possible to pay the high ocean freights and thus ensure continued importations. I have always thought that my coffee deal was the most legitimate of all my trades in commodities. I considered it more of an investment than a speculation. I was in it over a year. If there was any gambling, it was done by the patriotic roasters with German names and ancestry. They had coffee in Brazil and they sold it to me in New York. The price fixing committee fixed the price of the only commodity that had not advanced. They protected the public against profiteering before it started, but not against the inevitable higher prices that followed. Not only that, but even when green coffee hung around 163 Reminiscences of a Stock Operator cents a pound, roasted coffee went up with everything else. It was only the roasters who benefited. If the price of green coffee had gone up 2 or 3 cents a pound, it would have meant several millions for me. And it wouldn't have cost the public as much as the later advance did. Postmortems in speculation are a waste of time. They get you nowhere. But this particular deal has a certain educational value. It was as pretty as any I ever went into. The rise was so sure, so logical, that I figured that I simply couldn't help making several millions of dollars. But I didn't. On 2 other occasions I have suffered from the action of exchange committees making rulings that changed trading rules without warning. But in those cases my own position, while technically right, was not quite so sound commercially as in my coffee trade. You cannot be dead sure of anything in a speculative operation. It was the experience I have just told you that made me add the unexpected to the unexpected in my list of hazards. After the coffee episode, one was so successful in other commodities and on the short side of the stock market that I began to suffer from silly gossip. The professionals in Wall Street and the newspaper writers got the habit of blaming me and my alleged raids for the inevitable breaks in prices. At times my selling was called unpatriotic, whether I was really selling or not. The reason for exaggerating the magnitude and the effect of my operations, I suppose, was the need to satisfy the public's insatiable demand for reasons for each and every price movement. As I have said 1,000 times, no manipulation can put stocks down and keep them down. There is nothing mysterious about this. The reason is plain to everybody who will take the trouble to think about it half a minute. Suppose an operator rated a stock that put the price down to a level below its real value. What would inevitably happen? Why, the rater would at once be up against the best kind of inside buying. The people who know what a stock is worth will always buy it when it is selling at bargain prices. If the insiders are not able to buy, it will be because general conditions are against their free command of their own resources, and such conditions are not bull conditions. When people speak about raids, the inference is that the raids are unjustified, almost criminal. But selling a stock down to a price much below what it is worth is mighty dangerous business. It is well to bear in mind that a rated stock that fails to rally is not getting much inside buying, and where there is a raid that is unjustified short selling, there is 164 Reminiscences of a stock operator. Usually apt to be inside buying, and when there is that, the price does not stay down. I should say that in 99 cases out of 100, so-called raids are really legitimate. Declines, accelerated at times but not primarily caused by the operations of a professional trader, however big a line he may be able to swing. The theory that most of the sudden declines or particular sharp breaks are the results of some plunger's operations probably was invented as an easy way of supplying reasons to those speculators who, being nothing but blind gamblers, will believe anything that is told them rather than do a little thinking. The raid excuse for losses that unfortunate speculators so often receive from brokers and financial gossipers is really an inverted tip. The difference lies in this: a bear tip is distinct, positive advice to sell short. But the inverted tip, that is, the explanation that does not explain, serves merely to keep you from wisely selling short. The natural tendency when a stock breaks badly is to sell it. There is a reason, an unknown reason but a good reason, therefore get out. But it is not wise to get out when the break is the result of a raid by an operator, because the moment he stops, the price must rebound. Inverted tips. 165. Reminiscences of a stock operator. Chapter 16. Tips. How people want tips. They crave not only to get them but to give them. There is greed involved, and vanity. It is very amusing, at times, to watch really intelligent people fish for them. And the tip giver need not hesitate about the quality, for the tip seeker is not really after good tips, but after any tip. If it makes good, fine. If it doesn't, better luck with the next. I am thinking of the average customer of the average commission house. There is a type of promoter or manipulator that believes in tips first, last, and all the time. A good flow of tips is considered by him as a sort of sublimated publicity work, the best merchandising dope in the world, for, since tip seekers and tip takers are invariably tip passers, tip broadcasting becomes a sort of endless chain. Advertising. The tipster promoter labors under the delusion that no human being breathes who can resist a tip if properly delivered. He studies the art of handing them out artistically. I get tips by the hundreds every clay from all sorts of people. I'll tell you a story about Borneo tin. You remember when the stock was brought out? It was at the height of the boom. The promoter's pool had taken the advice of a very clever banker and decided to float the new company in the open market at once instead of letting an underwriting syndicate take its time about it. It was good advice. The only mistake the members of the pool made came from inexperience. They did not know what the stock market was capable of doing during a crazy boom, and at the same time they were not intelligently liberal. They were agreed on the need of marking up the price in order to market the stock. But they started the trading at a figure at which the traders and the speculative pioneers could not buy it without misgivings. By rights, the promoters ought to have got stuck with it, but in the wild bull market their hoggishness turned out to be rank conservatism. The public was buying anything that was adequately tipped. Investments were not wanted. The demand was for easy money. 166. Reminiscences of a stock operator. For the sure gambling profit. Gold was pouring into this country through the huge purchases of war material. They tell me that the promoters, while making their plans for bringing out Borneo stock, marked up the opening price 3 different times before their first transaction was officially recorded for the benefit of the public. I had been approached to join the pool and I had looked into it, but I didn't accept the offer because if there is any market maneuvering to do, I like to do it myself. I trade on my own information and follow my own methods. When Borneo Tin was brought out, knowing what the pool's resources were and what they had planned to do, and also knowing what the public was capable of, I bought 10,000 shares during the first hour of the first day. Its market debut was successful, at least to that extent. As a matter of fact, the promoters found the demand so active that they decided it would be a mistake to lose so much stock so soon. They found out that I had acquired my 10,000 shares about at the same time that they found out that they would probably be able to sell every share they owned if they merely marked up the price 25 or 30 points. They therefore concluded that the profit on my 10,000 shares would take too big a chunk out of the millions they felt were already as good as banked. So they actually ceased their bull operations and tried to shake me out. But I simply sat tight. They gave me up as a bad job because they didn't want the market to get away from them, and then they began to put up the price, without losing any more stock than they could help. They saw the crazy height that other stocks rose to, and they began to think in billions. Well, when Borneo Tin got up to 120, I let them have my 10,000 shares. It checked the rise, and the pool managers let up on their jacking up process. On the next general rally, they again tried to make an active market for it and disposed of quite a little, but the merchandising proved to be rather expensive. Finally, they marked it up to 150. But the bloom was off the bull market for keeps, so the pool was compelled to market what stock it could on the way down to those people who love to buy after a good reaction on the fallacy that a stock that has once sold at 150 must be cheap at 130 and a great bargain at 120. Also, they passed the tip first to the floor traders, who often are able to make a temporary market, and later to the commission houses. Every little helped, and the pool was using every device known. The trouble was that the time for bulling stocks had passed. The suckers had swallowed other hooks. The Borneo bunch didn't or wouldn't see it. 167. Reminiscences of a Stock Operator. I was down in Palm Beach with my wife. One day I made a little money at Gridley's, and when I got home I gave Mrs. Livingston a $500 bill out of it. It was a curious coincidence, but that same night she met at a dinner the president of the Borneo Tin Company, a Mr. Weisenstein, who had become the manager of the stock pool. We didn't learn until some time afterward that this Weisenstein deliberately maneuvered so that he sat next to Mrs. Livingston at dinner. He laid himself out to be particularly nice to her and talked most entertainingly. In the end he told her, very confidentially, "Mrs. Livingston, I'm going to do something I've never done before. I am very glad to do it because you know exactly what it means." He stopped and looked at Mrs. Livingston anxiously, to make sure she was not only wise but discreet. She could read it on his face, plain as print. But all she said was, "Yes. Yes, Mrs. Livingston. It has been a very great pleasure to meet you and your husband. And I want to prove that I am sincere in saying this because I hope to see a great deal of both of you. I am sure I don't have to tell you that what I am going to say is strictly confidential." Then he whispered, "If you will buy some Borneo tin you will make a great deal of money." "Do you think so?" she asked. "Just before I left the hotel," he said, "I received some cables with news that won't be known to the public for several days at least. I am going to gather in as much of the stock as I can. If you get some at the opening tomorrow you will be buying it at the same time and at the same price as I give you my word that Borneo tin will surely advance. You are the only person that I have told this to. Absolutely the only one." She thanked him and then she told him that she didn't know anything about speculating in stocks. But he assured her it wasn't necessary for her to know any more than he had told her. To make sure she heard it correctly, he repeated his advice to her. All you have to do is to buy as much Borneo tin as you wish. I can give you my word that if you do, you will not lose a cent. I've never before told a woman or a man, for that matter, to buy anything in my life. But I am so sure the stock won't stop this side of 200 that I'd like you to make some money. I can't buy all the stock myself, you know, and if somebody besides myself is going to benefit by the rise, I'd rather it was you than some stranger. Much rather. I've told you in confidence because I know you won't talk about. 168. Reminiscences of a Stock Operator. Take my word for it, Mrs. Livingston, and buy Borneo tin. He was very earnest about it and succeeded in so impressing her that she began to think she had found an excellent use for the $500 I had given her that afternoon. That money hadn't cost me anything and was outside of her allowance. In other words, it was easy money to lose if the luck went against her. But he had said she would surely win. It would be nice to make money on her own hook and tell me all about it afterwards. Well, sir, the very next morning before the market opened, she went into Harding's office and said to the manager, Mr. Haley, I want to buy some stock, but I don't want it to go in my regular account, because I don't wish my husband to know anything about it until I've made some money. Can you fix it for me? Haley, the manager, said, Oh, yes. We can make it a special account. What's the stock? And how much of it do you want to buy? She gave him the $500 and told him, Listen, please. I do not wish to lose more than this money. If that goes, I don't want to owe you anything, and remember, I don't want Mr. Livingston to know anything about this. Buy me as much Borneo tin as you can for the money at the opening. Haley took the money and told her he'd never say a word to a soul, and bought her 100 shares at the opening. I think she got it at 108. The stock was very active that day and closed at an advance of 3 points. Mrs. Livingston was so delighted with her exploit that it was all she could do to keep from telling me all about it. It so happened that I had been getting more and more bearish on the general market. The unusual activity in Borneo tin drew my attention to it. I didn't think the time was right for any stock to advance, much less one like that. I had decided to begin my bear operations that very day, and I started by selling about 10,000 shares of Borneo. If I had not, I rather think the stock would have gone up 5 or 6 points instead of 3. On the very next day I sold 2,000 shares at the opening and 2,000 shares just before the close, and the stock broke to 102. 169. Reminiscences of a Stock Operator. Haley, the manager of Harding Brothers' Palm Beach branch, was waiting for Mrs. Livingston to call there on the third morning. She usually strolled in about 11 to see how things were, if I was doing anything. Haley took her aside and said, Mrs. Livingston, if you want me to carry that 100 shares of Borneo tin for you, you will have to give me more margin. But I haven't any more, she told him. I can transfer it to your regular account, he said. No, she objected, because that way LL would learn about it. But the account already shows a loss of, he began. But I told you distinctly I didn't want to lose more than the $500. I didn't even want to lose that, she said. I know, Mrs. Livingston, but I didn't want to sell it without consulting you, and now, unless you authorize me to hold it, I'll have to let it go. But it did so nicely the day I bought it, she said, that I didn't believe it would act this way so soon. Did you? No, answered Haley, I didn't. They have to be diplomatic in brokers' offices. What's gone wrong with it, Mr. Haley? Haley knew, but he could not tell her without giving me away, and a customer's business is sacred. So he said, I don't hear anything special about it, one way or another. There she goes. That's low for the move, and he pointed to the quotation board. Mrs. Livingston gazed at the sinking stock and cried, Oh, Mr. Haley. I didn't want to lose my $500. What shall I do? I don't know, Mrs. Livingston, but if I were you I'd ask Mr. Livingston. Oh, no. He doesn't want me to speculate on my own hook. He's told me so. He'll buy or sell stock for me, if I ask him, but I've never before done trading that he did not know all. 170. Reminiscences of a stock operator. About. I wouldn't dare tell him. That's all right, said Haley soothingly. He is a wonderful trader and he'll know just what to do. Seeing her shake her head violently, he added devilishly, or else you put up 1,000 or 2 to take care of your Borneo. The alternative decided her then and there. She hung about the office, but as the market got weaker and weaker she came over to where I sat watching the board and told me she wanted to speak to me. We went into the private office and she told me the whole story. So I just said to her, You foolish little girl. You keep your hands off this deal. She promised that she would, and so I gave her back her $500 and she went away happy. The stock was par by that time. I saw what had happened. Weisenstein was an astute person. He figured that Mrs. Livingston would tell me what he had told her and I'd study the stock. He knew that activity always attracted me and I was known to swing a pretty fair line. I suppose he thought I'd buy 10 or 20,000 shares. It was one of the most cleverly planned and artistically propelled tips I've ever heard of. But it went wrong. It had to. In the first place, the lady had that very day received an unearned $500 and was therefore in a much more venturesome mood than usual. She wished to make some money all by herself, and woman-like dramatized the temptation so attractively that it was irresistible. She knew how I felt about stock speculation as practiced by outsiders, and she didn't dare mention the matter to me. Weisenstein didn't size up her psychology right. He also was utterly wrong in his guess about the kind of trader I was. I never take tips. And I was bearish on the entire market. The tactics that he thought would prove effective in inducing me to buy Borneo, that is, the activity and the 3-point rise, were precisely what made me pick Borneo as a starter when I decided to sell the entire market. After I heard Mrs. Livingston's story, I was keener than ever to sell Borneo. Every morning at the opening and every afternoon just before closing I let him have some stock regularly, until I saw a chance to take in my shorts at a handsome profit. It has always seemed to me the height of damn foolishness to trade on tips. I suppose I am. 171. Reminiscences of a stock operator. Not built the way a tip taker is. I sometimes think that tip takers are like drunkards. There are some who can't resist the craving and always look forward to those jags which they consider indispensable to their happiness. It is so easy to open your ears and let the tip in. To be told precisely what to do to be happy in such a manner that you can easily obey is the next nicest thing to being happy, which is a mighty long first step toward the fulfillment of your heart's desire. It is not so much greed made blind by eagerness as it is hope bandaged by the unwillingness to do any thinking. And it is not only among the outside public that you find inveterate tip takers. The professional trader on the floor of the New York Stock Exchange is quite as bad. I am definitely aware that no end of them cherish mistaken notions of me because I never give anybody tips. If I told the average man, sell yourself 5,000 steel, he would do it on the spot. But if I tell him I am quite bearish on the entire market and give him my reasons in detail, he finds trouble in listening, and after I'm done talking he will glare at me for wasting his time expressing my views on general conditions instead of giving him a direct and specific tip, like a real philanthropist of the type that is so abundant in Wall Street, the sort who loves to put millions into the pockets of friends, acquaintances, and utter strangers alike. The belief in miracles that all men cherish is born of a moderate indulgence in hope. There are people who go on hope sprees periodically, and we all know the chronic hope drunkard that is held up before us as an exemplary optimist. Tip takers are all they really are. I have an acquaintance, a member of the New York Stock Exchange, who was one of those who thought I was a selfish, cold-blooded pig because I never gave tips or put friends into things. One day, this was some years ago, he was talking to a newspaperman who casually mentioned that he had had it from a good source that GOH was going up. My broker friend promptly bought 1,000 shares and saw the price decline so quickly that he was out $3,500 before he could stop his loss. He met the newspaperman a day or two later, while he still was sore. "That was a hell of a tip you gave me," he complained. "What tip was that?" asked the reporter, who did not remember. "About GOH. You said you had it from a good source." 172. Reminiscences of a stock operator. "So I did." A director of the company who is a member of the finance committee told me. "Which of them was it?" asked the broker vindicatively. "If you must know," answered the newspaperman, "it was your own father-in-law, Mr. Westlake." "Why in Hades didn't you tell me you meant him?" yelled the broker. "You cost me $3,500. He didn't believe in family tips. The farther away the source, the purer the tip." Old Westlake was a rich and successful banker and promoter. He ran across John W. Gates one day. Gates asked him what he knew. "If you will act on it, I'll give you a tip." "If you won't, I'll save my breath," answered Old Westlake grumpily. "Of course I'll act on it," promised Gates cheerfully. "Sell reading. There is a sure 25 points in it, and possibly more." "But 25 absolutely certain," said Westlake impressively. "I'm much obliged to you, and bet you $1,000,000. Gates shook hands warmly and went away in the direction of his broker's office. Westlake had specialized on reading. He knew all about the company and stood in with the insiders so that the market for the stock was an open book to him, and everybody knew it. Now he was advising the Western plunger to go short of it. Well, reading never stopped going up. It rose something like 100 points in a few weeks. One day Old Westlake ran smack up against John West in the street, but he made out he hadn't seen him and was walking on. John W. Gates caught up with him, his face all smiles, and held out his hand. Old Westlake shook it dazedly. "I want to thank you for that tip you gave me on reading," said Gates. "I didn't give you any tip," said Westlake, frowning. "Sure you did. And it was a Jim Hickey of a tip too. I made $60,000. 173. Reminiscences of a stock operator. Made $60,000? Sure. Don't you remember? You told me to sell reading, so I bought it. I've always made money coppering your tips, Westlake," said John W. Gates pleasantly. "Always." Old Westlake looked at the bluff Westerner and presently remarked admiringly, "Gates, what a rich man I'd be if I had your brains." The other day I met Mr. W. A. Rogers, the famous cartoonist, whose Wall Street drawings brokers so greatly admire. His daily cartoons in the New York Herald for years gave pleasure to thousands. Well, he told me a story. It was just before we went to war with Spain. He was spending an evening with a broker friend. When he left, he picked up his derby hat from the rack, at least he thought it was his hat, for it was the same shape and fitted him perfectly. The street at that time was thinking and talking of nothing but war with Spain. Was there to be one or not? If it was to be war, the market would go down, not so much on our own selling as on pressure from European holders of our securities. If peace, it would be a cinch to buy stocks, as there had been considerable declines prompted by the sensational clamorings of the yellow papers. Mr. Rogers told me the rest of the story as follows. My friend, the broker, at whose house I had been the night before, stood in the exchange the next day anxiously debating in his mind which side of the market to play. He went over the pros and cons, but it was impossible to distinguish which were rumors and which were facts. There was no authentic news to guide him. At one moment he thought war was inevitable, and on the next he almost convinced himself that it was utterly unlikely. His perplexity must have caused a rise in his temperature, for he took off his derby to wipe his fevered brow. He couldn't tell whether he should buy or sell. He happened to look inside of his hat. There in gold letters was the word war. That was all the hunch he needed. Was it not a tip from Providence via my hat? So he sold a raft of stock. War was duly declared. He covered on the break and made a killing. And then W.A. Rogers finished. I never got back that hat. But the prize tip story of my collection concerns one of the most popular members of the 174 Reminiscences of a Stock Operator. New York Stock Exchange, J. T. Hood. One day another floor trader, Bert Walker, told him that he had done a good turn to a prominent director of the Atlantic and Southern. In return, the grateful insider told him to buy all the A and S he could carry. The directors were going to do something that would put the stock up at least 25 points. All the directors were not in the deal, but the majority would be sure to vote as wanted. Bert Walker concluded that the dividend rate was going to be raised. He told his friend Hood, and they each bought a couple of thousand shares of A and S. The stock was very weak before and after they bought, but Hood said that was obviously intended to facilitate accumulation by the inside clique, headed by Bert's grateful friend. On the following Thursday, after the market closed, the directors of the Atlantic and Southern met and passed the dividend. The stock broke 6 points in the first 6 minutes of trading Friday morning. Bert Walker was sore as a pup. He called on the grateful director, who was broken hearted about it and very penitent. He said that he had forgotten that he had told Walker to buy. That was the reason he had neglected to call him up to tell him of a change in the plans of the dominant faction in the board. The remorseful director was so anxious to make up that he gave Bert another tip. He kindly explained that a couple of his colleagues wanted to get cheap stock and against his judgment resorted to coarse work. He had to yield to win their votes. But now that they all had accumulated their full lines, there was nothing to stop the advance. It was a double, riveted, lead pipe cinch to buy A and S now. Bert not only forgave him but shook hands warmly with the high financier. Naturally he hastened to find his friend and fellow victim, Hood, to impart the glad tidings to him. They were going to make a killing. The stock had been tipped for a rise before and they bought. But now it was 15 points lower. That made it a cinch. So they bought 5,000 shares, joint account. As if they had rung a bell to start it, the stock broke badly on what quite obviously was inside selling. 2 specialists cheerfully confirmed the suspicion. Hood sold out their 5,000 shares. When he got through, Bert Walker said to him, "If that blankety blanker hadn't gone to Florida day before yesterday, I'd lick the stuffing out of him." "Yes, I would. But you come with me." 175. Reminiscences of a stock operator. Where to? Asked Hood. To the telegraph office. I want to send that skunk a telegram that he'll never forget. Come on. Hood went on. Bert led the way to the telegraph office. There, carried away by his feelings, they had taken quite a loss on the 5,000 shares he composed a masterpiece of vituperation. He read it to Hood and finished, that will come pretty near to showing him what I think of him. He was about to slide it toward the waiting clerk when Hood said, Hold on, Bert. What's the matter? I wouldn't send it, advised Hood earnestly. Why not? Snapped Bert. It will make him sore as the dickens. That's what we want, isn't it? Said Bert, looking at Hood in surprise. But Hood shook his head disapprovingly and said in all seriousness, We'll never get another tip from him if you send that telegram. A professional trader actually said that. Now what's the use of talking about sucker tip takers? Men do not take tips because they are bally asses but because they like those hope cocktails I spoke of. Old Baron Rothschild's recipe for wealth winning applies with greater force than ever to speculation. Somebody asked him if making money in the bourse was not a very difficult matter, and he replied that, on the contrary, he thought it was very easy. That is because you are so rich, objected the interviewer. Not at all. I have found an easy way and I stick to it. I simply cannot help making money. I will tell you my secret if you wish. It is this, I never buy at the bottom and I always sell too soon. 176. Reminiscences of a stock operator. Investors are a different breed of cats. Most of them go in strong for inventories and statistics of earnings and all sorts of mathematical data, as though that meant facts and certainties. The human factor is minimized as a rule. Very few people like to buy into a one-man business. But the wisest investor I ever knew was a man who began by being a Pennsylvania Dutchman and followed it up by coming to Wall Street and seeing a great deal of Russell Sage. He was a great investigator, an indefatigable Missourian. He believed in asking his own questions and in doing his seeing with his own eyes. He had no use for another man's spectacles. This was years ago. It seems he held quite a little Atchison. Presently he began to hear disquieting reports about the company and its management. He was told that Mr. Reinhardt, the president, instead of being the marvel he was credited with being, in reality was a most extravagant manager whose recklessness was fast pushing the company into a mess. There would be the deuce to pay on the inevitable day of reckoning. This was precisely the kind of news that was as the breath of life to the Pennsylvania Dutchman. He hurried over to Boston to interview Mr. Reinhardt and ask him a few questions. The questions consisted of repeating the accusations he had heard and then asking the president of the Atchison, Topeka and Santa Fe Railroad if they were true. Mr. Reinhardt not only denied the allegations emphatically but said even more. He proceeded to prove by figures that the alligators were malicious liars. The Pennsylvania Dutchman had asked for exact information and the president gave it to him, showing him what the company was doing and how it stood financially, to a cent. The Pennsylvania Dutchman thanked President Reinhardt, returned to New York and promptly sold all his Atchison holdings. A week or so later he used his idle funds to buy a big lot of Delaware, Lackawanna and Western. Years afterward we were talking of lucky swaps and he cited his own case. He explained what prompted him to make it. You see, he said, I noticed that President Reinhardt, when he wrote down figures, took sheets of letter paper from a pigeonhole in his mahogany roll-top desk. It was fine heavy linen paper with beautifully engraved letterheads in 2 colors. It was not only very Expensive, but worse, it was unnecessarily expensive. He would write a few figures on a 177 Reminiscences of a Stock Operator sheet to show me exactly what the company was earning on certain divisions, or to prove how they were cutting down expenses or reducing operating costs, and then he would crumple up the sheet of the expensive paper and throw it in the wastebasket. Pretty soon, he would want to impress me with the economies they were introducing, and he would reach for a fresh sheet of the beautiful notepaper with the engraved letterheads in 2 colors. A few figures and bingo, into the wastebasket. More money wasted without a thought. It struck me that if the president was that kind of a man, he would scarcely be likely to insist upon having or rewarding economical assistance. I therefore decided to believe the people who had told me the management was extravagant instead of accepting the president's version, and I sold what Atchison stock I held. It so happened that I had occasion to go to the offices of the Delaware, Lackawanna, and Western a few days later. Old Sam Sloan was the president. His office was the nearest to the entrance, and his door was wide open. It was always open. Nobody could walk into the general offices of the D.L.&W. in those days and not see the president of the company seated at his desk. Any man could walk in and do business with him right off, if he had any business to do. The financial reporters used to tell me that they never had to beat about the bush with old Sam Sloan, but would ask their questions and get a straight yes or no from him, no matter what the stock market exigencies of the other directors might be. When I walked in, I saw the old man was busy. I thought at first that he was opening his mail, but after I got inside close to the desk, I saw what he was doing. I learned afterwards that it was his daily custom to do it. After the mail was sorted and opened, instead of throwing away the empty envelopes, he had them gathered up and taken to his office. In his leisure moments, he would rip the envelope all around. That gave him 2 bits of paper, each with one clean blank side. He would pile these up, and then he would have them distributed about, to be used in lieu of scratch pads for such figuring as Reinhardt had done for me on engraved notepaper. No waste of empty envelopes and no waste of the president's idle moments. Everything utilized. It struck me that if that was the kind of man the D.L.&W. had for president, the company was managed economically in all departments. The president would see to that. Of course, I knew the company was paying regular dividends and had a good property. I bought all the D.L.&W. stock I could. Since that time, the capital stock has been doubled and quadrupled. My annual dividends amount to as much as my original 178 Reminiscences of a Stock Operator investment. I still have my D.L.&W. And Atchison went into the hands of a receiver a few months after I saw the president throwing sheet after sheet of linen paper with engraved letterheads in 2 colors into the wastebasket to prove to me with figures that he was not extravagant. And the beauty of that story is that it is true, and that no other stock that the Pennsylvania Dutchman could have bought would have proved to be so good an investment as D.L.&W. 179 Reminiscences of a Stock Operator. Chapter 17. One of my most intimate friends is very fond of telling stories about what he calls my hunches. He is forever ascribing to me powers that defy analysis. He declares I merely follow blindly certain mysterious impulses and thereby get out of the stock market at precisely the right time. His pet yarn is about a black cat that told me, at his breakfast table, to sell a lot of stock I was carrying, and that after I got the pussy's message I was grouchy and nervous until I sold every share I was long of. I got practically the top prices of the movement, which of course strengthened the hunch theory of my hard-headed friend. I had gone to Washington to endeavor to convince a few congressmen that there was no wisdom in taxing us to death, and I wasn't paying much attention to the stock market. My decision to sell out my line came suddenly, hence my friend's yarn. I admit that I do get irresistible impulses at times to do certain things in the market. It doesn't matter whether I am long or short of stocks. I must get out. I am uncomfortable. Until I do. I myself think that what happens is that I see a lot of warning signals. Perhaps not a single one may be sufficiently clear or powerful to afford me a positive, definite reason for doing what I suddenly feel like doing. Probably that is all there is to what they call ticker sense that old traders say James or Keene had so strongly developed and other operators before him. Usually, I confess, the warning turns out to be not only sound but timed to the minute. But in this particular instance there was no hunch. The black cat had nothing to do with it. What he tells everybody about my getting up so grumpy that morning I suppose can be explained if I in truth was grouchy by my disappointment. I knew I was not convincing the congressman I talked to, and the committee did not view the problem of taxing Wall Street as I did. I wasn't trying to arrest or evade taxation on stock transactions, but to suggest a tax that I, as an experienced stock operator, felt was neither unfair nor unintelligent. I didn't want Uncle 180 Reminiscences of a Stock Operator Sam to kill the goose that could lay so many golden eggs with fair treatment. Possibly. My lack of success not only irritated me but made me pessimistic over the future of an unfairly taxed business. But I'll tell you exactly what happened. At the beginning of the bull market, I thought well of the outlook in both the steel trade and the copper market, and I therefore felt bullish on stocks of both groups. So I started to accumulate some of them. I began by buying 5,000 shares of Utah Copper and stopped because it didn't act right. That is, it did not behave as it should have behaved to make me feel I was wise in buying it. I think the price was around 114. I also started to buy United States Steel at almost the same price. I bought in all 20,000 shares the first day because it did act right. I followed the method I have described before. Steel continued to act right, and I therefore continued to accumulate it until I was carrying 72,000 shares of it in all. But my holdings of Utah Copper consisted of my initial purchase. I never got above the 5,000 shares. Its behavior did not encourage me to do more with it. Everybody knows what happened. We had a big bull movement. I knew the market was going up. General conditions were favorable, even after stocks had gone up extensively, and my paper profit was not to be sneezed at. The tape kept trumpeting, "Not yet. Not yet." When I arrived in Washington, the tape was still saying that to me. Of course, I had no intention of increasing my line at that late day, even though I was still bullish. At the same time, the market was plainly going my way, and there was no occasion for me to sit in front of a quotation board all day, in hourly expectation of getting a tip to get out. Before the clarion call to retreat came barring an utterly unexpected catastrophe, of course the market would hesitate or otherwise prepare me for a reversal of the speculative situation. That was the reason why I went blithely about my business with my congressman. At the same time, prices kept going up, and that meant that the end of the bull market was drawing nearer. I did not look for the end on any fixed date. That was something quite beyond my power to determine. But I needn't tell you that I was on the watch for the tip-off. I always am. Anyhow, it has become a matter of business habit with me. I cannot swear to it, but I rather suspect that the day before I sold out, seeing the high. 181. Reminiscences of a stock operator. Prices made me think of the magnitude of my paper profit as well as of the line I was carrying and, later on, of my vain efforts to induce our legislators to deal fairly and intelligently by Wall Street. That was probably the way and the time the seed was sown within me. The subconscious mind worked on it all night. In the morning I thought of the market and began to wonder how it would act that day. When I went down to the office, I saw not say much that prices were still higher and that I had a satisfying profit, but that there was a great big market with a tremendous power of absorption. I could sell any amount of stock in that market, and, of course, when a man is carrying his full line of stocks, he must be on the watch for an opportunity to change his paper profit into actual cash. He should try to lose as little of the profit as possible in the swapping. Experience has taught me that a man can always find an opportunity to make his profits real, and that this opportunity usually comes at the end of the move. That isn't tape reading or a hunch. Of course, when I found that morning a market in which I could sell out all my stocks without any trouble, I did so. When you are selling out, it is no wiser or braver to sell 50 shares than 50,000, but 50 shares you can sell in the dullest market without breaking the price, and 50,000 shares of a single stock is a different proposition. I had 72,000 shares of U.S. Steel. This may not seem a colossal line, but you can't always sell that much without losing some of that profit that looks so nice on paper when you figure it out, and that hurts as much to lose as if you actually had it safe in bank. I had a total profit of about $1,500,000, and I grabbed it while the grabbing was good. But that wasn't the principal reason for thinking that I did the right thing in selling out. When I did, the market proved it for me, and that was indeed a source of satisfaction to me. It was this way I succeeded in selling my entire line of 72,000 shares of U.S. Steel at a price which averaged me just 1 point from the top of the day and of the movement. It proved that I was right to the minute. But when, on the very same hour of the very same day, I came to sell my 5,000 Utah copper, the price broke 5 points. Please recall that I began buying both stocks at the same time and that I acted wisely in increasing my line of U.S. Steel from 20,000 shares to 72,000, and equally wisely in not increasing my line of Utah from the original 5,000 shares. The reason why I didn't sell out my Utah copper before was that I was bullish on the copper trade, and it was a bull market in stocks, and I didn't think that Utah would hurt me much even if I didn't make a killing in it. But as for hunches, there weren't any. 182. Reminiscences of a stock operator. The training of a stock trader is like a medical education. The physician has to spend long years learning anatomy, physiology, materia medica, and collateral subjects by the dozen. He learns the theory and then proceeds to devote his life to the practice. He observes and classifies all sorts of pathological phenomena. He learns to diagnose. If his diagnosis is correct, and that depends upon the accuracy of his observation, he ought to do pretty well in his prognosis, always keeping in mind, of course, that human fallibility and the utterly unforeseen will keep him from scoring 100% of bullseyes. And then, as he gains in experience, he learns not only to do the right thing but to do it instantly, so that many people will think he does it instinctively. It really isn't automatism. It is that he has diagnosed the case according to his observations of such cases during a period of many years, and, naturally, after he has diagnosed it, he can only treat it in the way that experience has taught him is the proper treatment. You can transmit knowledge, that is, your particular collection of card-indexed facts but not your experience. A man may know what to do and lose money if he doesn't do it quickly enough. Observation, experience, memory and mathematics, these are what the successful trader must depend on. He must not only observe accurately but remember at all times what he has observed. He cannot bet on the unreasonable or on the unexpected, however strong his personal convictions may be about man's unreasonableness or however certain he may feel that the unexpected happens very frequently. He must bet always on probabilities, that is, try to anticipate them. Years of practice at the game, of constant study, of always remembering, enable the trader to act on the instant when the unexpected happens as well as when the expected comes to pass. A man can have great mathematical ability and an unusual power of accurate observation and yet fail in speculation unless he also possesses the experience and the memory. And then, like the physician who keeps up with the advances of science, the wise trader never ceases to study general conditions, to keep track of developments everywhere that are likely to affect or influence the course of the various markets. After years at the game, it becomes a habit to keep posted. He acts almost automatically. He acquires the invaluable professional attitude, and that enables him to beat the game at times. This difference between the professional and the amateur or occasional trader cannot be overemphasized. I find, for instance, that memory and mathematics help me very much. Wall Street makes its money on a mathematical basis. I mean, it makes its money by dealing with facts and figures. 183. Reminiscences of a stock operator. When I said that a trader has to keep posted to the minute and that he must take a purely professional attitude toward all markets and all developments, I merely meant to emphasize again that hunches and the mysterious ticker sense haven't so very much to do with success. Of course, it often happens that an experienced trader acts so quickly that he hasn't time to give all his reasons in advance, but nevertheless they are good and sufficient reasons, because they are based on facts collected by him in his years of working and thinking and seeing things from the angle of the professional, to whom everything that comes to his mill is grist. Let me illustrate what I mean by the professional attitude. I keep track of the commodities markets, always. It is a habit of years. As you know, the government reports indicated a winter wheat crop about the same as last year and a bigger spring wheat crop than in 1921. The condition was much better and we probably would have an earlier harvest than usual. When I got the figures of condition and I saw what we might expect in the way of yield mathematics, I also thought at once of the coal miners' strike and the railroad shopmen's strike. I couldn't help thinking of them because my mind always thinks of all developments that have a bearing on the markets. It instantly struck me that the strike, which had already affected the movement of freight everywhere, must affect wheat prices adversely. I figured this way, there was bound to be considerable delay in moving winter wheat to market by reason of the strike crippled transportation facilities, and by the time those improved, the spring wheat crop would be ready to move. That means that when the railroads were able to move wheat in quantity, they would be bringing in both crops together, the delayed winter and the early spring wheat, and that would mean a vast quantity of wheat pouring into the market at one fell swoop. Such being the facts of the case, the obvious probabilities, the traders, who would know and figure as I did, would not bull wheat for a while. They would not feel like buying it unless the price declined to such figures as made the purchase of wheat a good investment. With no buying power in the market, the price ought to go down. Thinking the way I did, I must find whether I was right or not. As old Pat Hearn used to remark, you can't tell till you bet. Between being bearish and selling, there is no need to waste time. Experience has taught me that the way a market behaves is an excellent guide for an operator to follow. It is like taking a patient's temperature and pulse or noting the color of the eyeballs and the coating of the tongue. 184. Reminiscences of a stock operator. Now, ordinarily a man ought to be able to buy or sell 1,000,000 bushels of wheat within a range of 1/4 cent. On this day when I sold the 250,000 bushels to test the market for timeliness, the price went down 1/4 cent. Then, since the reaction did not definitely tell me all I wished to know, I sold another 250,000 bushels. I noticed that it was taken in driblets, that is, the buying was in lots of 10,000 or 15,000 bushels instead of being taken in 2 or 3 transactions, which would have been the normal way. In addition to the homeopathic buying, the price went down 1¼ cents on my selling. Now, I need not waste time pointing out that the way in which the market took my wheat and the disproportionate decline on my selling told me that there was no buying power there. Such being the case, what was the only thing to do? Of course, to sell a lot more. Following the dictates of experience may possibly fool you, now and then. But not following them invariably makes an ass of you. So I sold 2,000,000 bushels and the price went down some more. A few days later, the market's behavior practically compelled me to sell an additional 2,000,000 bushels and the price declined further still. A few days later, wheat started to break badly and slumped off 6 cents a bushel. And it didn't stop there. It has been going down, with short-lived rallies. Now, I didn't follow a hunch. Nobody gave me a tip. It was my habitual or professional mental attitude toward the commodities markets that gave me the profit, and that attitude came from my years at this business. I study because my business is to trade. The moment the tape told me that I was on the right track, my business duty was to increase my line. I did. That is all there is to it. I have found that experience is apt to be steady dividend payer in this game, and that observation gives you the best tips of all. The behavior of a certain stock is all you need. At times, you observe it. Then experience shows you how to profit by variations from the usual, that is, from the probable. For example, we know that all stocks do not move one way together, but that all the stocks of a group will move up in a bull market and down in a bear market. This is a commonplace of speculation. It is the commonest of all self-given tips, and the commission houses are well aware of it and pass it on to any customer who has not thought of it himself. I mean, the advice to trade in those stocks which have lagged behind other stocks of the same group. Thus, if U.S. steel goes up, it is logically assumed that it is only a matter of time when Crucible or Republic or Bethlehem will follow suit. Trade conditions and prospects should work alike with all stocks of a group, and the prosperity should be shared by all. On the theory, corroborated by experience times without number, that every dog has his day in the market, the public. 185. Reminiscences of a stock operator. Will buy A, B steel because it has not advanced, while C, D steel and X, Y steel have gone up. I never buy a stock even in a bull market if it doesn't act as it ought to act in that kind of market. I have sometimes bought a stock during an undoubted bull market and found out that other stocks in the same group were not acting bullishly, and I have sold out my stock. Why? Experience tells me that it is not wise to buck against what I may call the manifest group tendency. I cannot expect to play certainties only. I must reckon on probabilities and anticipate them. An old broker once said to me, if I am walking along A railroad track and I see a train coming toward me at 60 miles an hour. Do I keep on walking on the ties? Friend, I sidestep. And I do not even pat myself on the back for being so wise and prudent. Last year, after the general bull movement was well underway, I noticed that one stock in a certain group was not going with the rest of the group, though the group with that one exception was going with the rest of the market. I was long a very fair amount of Blackwood Motors. Everybody knew that the company was doing a very big business. The price was rising from 1 to 3 points a day, and the public was coming in more and more. This naturally centered attention on the group, and all the various motor stocks began to go up. One of them, however, persistently held back, and that was Chester. It lagged behind the others so that it was not long before it made people talk. The low price of Chester and its apathy was contrasted with the strength and activity in Blackwood and other motor stocks, and the public logically enough listened to the touts and tipsters and wiseacres and began to buy Chester on the theory that it must presently move up with the rest of the group. Instead of going up on this moderate public buying, Chester actually declined. Now, it would have been no job to put it up in that bull market, considering that Blackwood, a stock of the same group, was one of the sensational leaders of the general advance, and we were hearing nothing but the wonderful improvement in the demand for automobiles of all kinds and the record output. It was thus plain that the inside clique in Chester were not doing any of the things that inside cliques invariably do in a bull market. For this failure to do the usual thing there might be two reasons. Perhaps the insiders did not put it up because they wished to accumulate more stock before advancing the price. But this was an untenable theory if 186. Reminiscences of a Stock Operator. You analyzed the volume and character of the trading in Chester. The other reason was that they did not put it up because they were afraid of getting stock if they tried to. When the men who ought to want a stock don't want it, why should I want it? I figured that no matter how prosperous other automobile companies might be, it was a cinch to sell Chester short. Experiences had taught me to beware of buying a stock that refuses to follow the group leader. I easily established the fact that not only there was no inside buying but that there was actually inside selling. There were other symptomatic warnings against buying Chester, though all I required was its inconsistent market behavior. It was again the tape that tipped me off, and that was why I sold Chester short. One day, not very long afterward, the stock broke wide open. Later on we learned officially, as it were, that insiders had indeed been selling it, knowing full well that the condition of the company was not good. The reason, as usual, was disclosed after the break. But the warning came before the break. I don't look out for the breaks, I look out for the warnings. I didn't know what was the trouble with Chester, neither did I follow a hunch. I merely knew that something must be wrong. Only the other day we had what the newspapers called a sensational movement in Guyana gold. After selling on the curb at 50 or close to it, it was listed on the stock exchange. It started there at around 35, began to go down and finally broke 20. Now, I'd never have called that break sensational because it was fully to be expected. If you had asked, you could have learned the history of the company. No end of people knew it. It was told to me as follows: a syndicate was formed consisting of a half dozen extremely well-known capitalists and a prominent banking house. One of the members was the head of the Belle Isle Exploration Company, which advanced Guyana over $10 million cash and received in return bonds and 250,000 shares out of a total of 1 million shares of the Guyana Gold Mining Company. The stock went on a dividend basis, and it was mighty well advertised. The Bellall people thought it well to cash in and they gave a call on their 250,000 shares to the bankers, who arranged to try to market that stock and some of their own holdings as well. They thought of entrusting the market manipulation to a professional whose fee was to be 1/3 of the profits from the sale of the 250,000 shares above 36. I understand that the agreement was drawn up and ready to be signed, but at the last moment the bankers decided to undertake the marketing. 187. Reminiscences of a stock operator themselves and save the fee. So they organized an inside pool. The bankers had a call on the Bellall holdings of 250,000 at 36. They put this in at 41. That is, insiders paid their own banking colleagues a 5-point profit to start with. I don't know whether they knew it or not. It is perfectly plain that to the bankers the operation had every semblance of a cinch. We had run into a bull market, and the stocks of the group to which Guyana Gold belonged were among the market leaders. The company was making big profits and paying regular dividends. This, together with the high character of the sponsors, made the public regard Guyana almost as an investment stock. I was told that about 400,000 shares were sold to the public all the way up to 47. The gold group was very strong. But presently Guyana began to sag. It declined 10 points. That was all right if the pool was marketing stock. But pretty soon the street began to hear that things were not altogether satisfactory and the property was not bearing out the high expectations of the promoters. Then, of course, the reason for the decline became plain. But before the reason was known I had the warning and had taken steps to test the market for Guyana. The stock was acting pretty much as Chester Motors did. I sold Guyana. The price went down. I sold more. The price went still lower. The stock was repeating the performance of Chester and of a dozen other stocks whose clinical history I remembered. The tape plainly told me that there was something wrong. Something that kept insiders from buying it, insiders who knew exactly why they should not buy their own stock in a bull market. On the other hand, outsiders who did not know were now buying because, having sold at 45 and higher, the stock looked cheap at 35 and lower. The dividend was still being paid. The stock was a bargain. Then the news came. It reached me, as important market news often does, before it reached the public. But the confirmation of the reports of striking barren rock instead of rich, or merely gave me the reason for the earlier inside selling. I myself didn't sell on the news. I had sold long before, on the stock's behavior. My concern with it was not philosophical. I am a trader and therefore looked for one sign: inside buying. There wasn't any. I didn't have to know why the insiders did not think enough of their own stock to buy it on the decline. It was enough that their market plans plainly did not include further manipulation for the rise. That made it a cinch to sell the stock short. The public had bought almost 500,000 shares, and the only change in ownership possible was from one set of ignorant outsiders who would sell in the hope of stopping. 188. Reminiscences of a stock operator. Losses to another set of ignorant outsiders who might buy in the hope of making money. I am not telling you this to moralize on the public's losses through their buying of Guyana or on my profit through my selling of it, but to emphasize how important the study of group behaviorism is and how its lessons are disregarded by inadequately equipped traders, big and little. And it is not only in the stock market that the tape warns you. It blows the whistle quite as loudly in commodities. I had an interesting experience in cotton. I was bearish on stocks and put out a moderate short line. At the same time I sold cotton short, 50,000 bales. My stock deal proved profitable and I neglected my cotton. The first thing I knew, I had a loss of $250,000 on my 50,000 bales. As I said, my stock deal was so interesting and I was doing so well in it that I did not wish to take my mind off it. Whenever I thought of cotton, I just said to myself, I'll wait for a reaction and cover. The price would react a little, but before I could decide to take my loss and cover, the price would rally again and go higher than ever. So I'd decide again to wait a little and I'd go back to my stock deal and confine my attention to that. Finally, I closed out my stocks at a very handsome profit and went away to Hot Springs for a rest and a holiday. That really was the first time that I had my mind free to deal with the problem of my losing deal in cotton. The trade had gone against me. There were times when it almost looked as if I might win out. I noticed that whenever anybody sold heavily, there was a good reaction. But almost instantly the price would rally and make a new high for the move. Finally, by the time I had been in Hot Springs a few days, I was $1 million to the bad and no let up in the rising tendency. I thought over all I had done and had not done, and I said to myself, I must be wrong. With me to feel that I am wrong and to decide to get out are practically one process. So I covered, at a loss of about $1 million. The next morning I was playing golf and not thinking of anything else. I had made my play in cotton. I had been wrong. I had paid for being wrong and the receipted bill was in my pocket. I had no more concern with the cotton market than I have at this moment. When I went back to the hotel for luncheon, I stopped at the broker's office and took a look at the quotations. I saw that cotton had gone off 50 points. That wasn't anything. But I also noticed that it had not rallied as it had been in the habit of doing for weeks, as soon as the pressure of the particular selling that had depressed it eased up. This had 189 Reminiscences of a Stock Operator indicated that the line of least resistance was upward, and it had cost me $1 million to shut my eyes to it. Now, however, the reason that had made me cover at a big loss was no longer a good reason, since there had not been the usual prompt and vigorous rally. So I sold 10,000 bales and waited. Pretty soon the market went off 50 points. I waited a little while longer. There was no rally. I had got pretty hungry by now, so I went into the dining room and ordered my luncheon. Before the waiter could serve it, I jumped up, went to the broker's office. I saw that there had been no rally, and so I sold 10,000 bales more. I waited a little and had the pleasure of seeing the price decline 40 points more. That showed me I was trading correctly, so I returned to the dining room, ate my luncheon, and went back to the broker's. There was no rally in cotton that day. That very night I left Hot Springs. It was all very well to play golf, but I had been wrong in cotton, in selling when I did and in covering when I did. So I simply had to get back on the job and be where I could trade in comfort. The way the market took my first 10,000 bales made me sell the second 10,000, and the way the market took the second made me certain the turn had come. It was the difference in behavior. Well, I reached Washington and went to my broker's office there, which was in charge of my old friend Tucker. While I was there, the market went down some more. I was more confident of being right now than I had been of being wrong before. So I sold 40,000 bales and the market went off 75 points. It showed that there was no support there. That night the market closed still lower. The old buying power was plainly gone. There was no telling at what level that power would again develop, but I felt confident of the wisdom of my position. The next morning I left Washington for New York by motor. There was no need to hurry. When we got to Philadelphia, I drove to a broker's office. I saw that there was the very dickens to pay in the cotton market. Prices had broken badly and there was a small-sized panic on. I didn't wait to get to New York. I called up my brokers on the long distance. And I covered my shorts. As soon as I got my reports and found that I had practically made up my previous loss, I motored on to New York without having to stop en route to see any more quotations. Some friends who were with me in Hot Springs talk to this day of the way I jumped up. 190. Reminiscences of a stock operator. From the luncheon table to sell that second lot of 10,000 bales. But again, that clearly was not a hunch. It was an impulse that came from the conviction that the time to sell cotton had now come, however great my previous mistake had been. I had to take advantage of it. It was my chance. The subconscious mind probably went on working, reaching conclusions for me. The decision to sell Washington was the result of my observation. My years of experience in trading told me that the line of least resistance had changed from up to down. I bore the cotton market no grudge for taking $1 million out of me, and I did not hate myself for making a mistake of that caliber any more than I felt proud for covering in Philadelphia and making up my loss. My trading mind concerns itself with trading problems, and I think I am justified in asserting that I made up my first loss because I had the experience and the memory. 191. Reminiscences of a stock operator. Chapter 18. History repeats itself all the time in Wall Street. Do you remember a story I told you about covering my shorts at the time Stratton had cornered? Well, another time I used practically the same tactics in the stock market. The stock was tropical trading. I have made money bulling it and also bearing it. It always was an active stock and a favorite with adventurous traders. The inside coterie has been accused time and again by the newspapers of being more concerned over the fluctuations in the stock than with encouraging permanent investment in it. The other day, one of the ablest brokers I know asserted that not even Daniel Drew in Erie or H.O. Havmeyer in Sugar developed so perfect a method for milking the market for a stock as President Mulligan and his friends have done in tropical trading. Many times they have encouraged the bears to sell TT short and then have proceeded to squeeze them with business-like thoroughness. There was no more vindictiveness about the process than is felt by a hydraulic press, or no more squeamishness either. Of course, there have been people who have spoken about certain unsavory incidents in the market career of TT stock. But I dare say these critics were suffering from the squeezing. Why do the room traders, who have suffered so often from the loaded dice of the insiders, continue to go up against the game? Well, for one thing, they like action, and they certainly get it in tropical trading. No prolonged spells of dullness. No reasons asked or given. No time wasted. No patience strained by waiting for the tipped movement to begin. Always enough stock to go around, except when the short interest is big enough to make the scarcity worthwhile. One born every minute. It so happened some time ago that I was in Florida on my usual winter vacation. I was fishing and enjoying myself without any thought of the markets, excepting when we received a batch of newspapers. One morning when the semi-weekly mail came in, I looked at the stock quotations and saw that tropical trading was selling at 155. The last. 192. Reminiscences of a stock operator. Time I'd seen a quotation in it, I think, was around 140. My opinion was that we were going into a bear market and I was biding my time before going short of stocks. But There was no mad rush. That was why I was fishing and out of hearing of the ticker. I knew that I'd be back home when the real call came. In the meanwhile, nothing that I did or failed to do would hurry matters a bit. The behavior of tropical trading was the outstanding feature of the market, according to the newspapers I got that morning. It served to crystallize my general bearishness, because I thought it particularly asinine for the insiders to run up the price of TT in the face of the heaviness of the general list. There are times when the milking process must be suspended. What is abnormal is seldom a desirable factor in a trader's calculations. And it looked to me as if the marking up of that stock were a capital blunder. Nobody can make blunders of that magnitude with impunity, not in the stock market. After I got through reading the newspapers, I went back to my fishing, but I kept thinking of what the insiders in tropical trading were trying to do. That they were bound to fail was as certain as that a man is bound to smash himself if he jumps from the roof of a 20-story building without a parachute. I couldn't think of anything else, and finally I gave up trying to fish and sent off a telegram to my brokers to sell 2,000 shares of TT at the market. After that, I was able to go back to my fishing. I did pretty well. That afternoon, I received the reply to my telegram by special courier. My brokers reported that they had sold the 2,000 shares of tropical trading at 153. So far, so good. I was selling short on a declining market, which was as it should be. But I could not fish any more. I was too far away from a quotation board. I discovered this after I began to think of all the reasons why tropical trading should go down with the rest of the market, instead of going up on inside manipulation. I therefore left my fishing camp and returned to Palm Beach, or, rather, to the direct wire to New York. The moment I got to Palm Beach and saw what the misguided insiders were still trying to do, I let them have a second lot of 2,000 TT. Back came the report and I sold another 2,000 shares. The market behaved excellently. That is, it declined on my selling. Everything being satisfactory, I went out and had a chair ride. But I wasn't happy. The more I thought, the unhappier it made me to think that I hadn't sold more. So back I went to the broker's office and sold another 2,000 shares. I was happy only when I was selling that stock. Presently I was short 10,000 shares. 193. Reminiscences of a stock operator. Then I decided to return to New York. I had business to do now. My fishing I would do some other time. When I arrived in New York, I made it a point to get a line on the company's business, actual and prospective. What I learned strengthened my conviction that the insiders had been worse than reckless in jacking up the price at a time when such an advance was not justified either by the tone of the general market or by the company's earnings. The rise, illogical and ill-timed though it was, had developed some public following, and this doubtless encouraged the insiders to pursue their unwise tactics. Therefore I sold more stock. The insiders ceased their folly. So I tested the market again and again, in accordance with my trading methods, until finally I was short 30,000 shares of the stock of the Tropical Trading Company. By then the price was 133. I had been warned that the TT insiders knew the exact whereabouts of every stock certificate in the street and the precise dimensions and identity of the short interest, as well as other facts of tactical importance. They were able men and shrewd traders. Altogether it was a dangerous combination to go up against. But facts are facts, and the strongest of all allies are conditions. Of course, on the way down from 153 to 133, the short interest had grown and the public that buys on reactions began to argue as usual that stock had been considered a good purchase at 153 and higher. now 20 points lower. It was necessarily a much better purchase. Same stock, same dividend rate, same officers, same business. Great bargain. The public's purchases reduced the floating supply, and the insiders, knowing that a lot of room traders were short, thought the time propitious for a squeezing. The price was duly run up to 150. I dare say there was plenty of covering, but I stayed pat. Why shouldn't I? The insiders might know that a short line of 30,000 shares had not been taken in, but why should that frighten me? The reasons that had impelled me to begin selling at 153 and keep at it on the way down to 133 not only still existed but were stronger than ever. The insiders might desire to force me to cover, but they adduced no convincing arguments. Fundamental conditions were fighting for me. It was not difficult to be both fearless and patient. A speculator must have faith in himself and in his judgment. The late Dixon G. Watts, ex-president of the New York Cotton Exchange and famous author of Speculation as a Fine Art, says that courage in a speculator is merely confidence to act on the decision of his mind. With me, I cannot fear to be wrong because I never think I. 194. Reminiscences of a Stock Operator. Am wrong until I am proven wrong. In fact, I am uncomfortable unless I am capitalizing my experience. The course of the market at a given time does not necessarily prove me wrong. It is the character of the advance or of the decline that determines for me the correctness or the fallacy of my market position. I can only rise by knowledge. If I fall, it must be by my own blunders. There was nothing in the character of the rally from 133 to 150 to frighten me into covering, and presently the stock, as was to be expected, started down again. It broke 140 before the inside clique began to give it support. Their buying was coincident with a flood of bull rumors about the stock. The company, we heard, was making perfectly fabulous profits, and the earnings justified an increase in the regular dividend rate. Also, the short interest was said to be perfectly huge, and the squeeze of the century was about to be inflicted on the bear party in general, and in particular on a certain operator who was more than overextended. I couldn't begin to tell you all I heard as they ran the price up 10 points. The manipulation did not seem particularly dangerous to me, but when the price touched 149, I decided that it was not wise to let the street accept as true all the bull statements that were floating around. Of course, there was nothing that I or any other rank outsider could say that would carry conviction either to the frightened shorts or to those credulous customers of commission houses that trade on hearsay tips. The most effective retort courteous is that which the tape alone can print. People will believe that when they will not believe an affidavit from any living man, much less one from a chap who is short 30,000 shares. So I used the same tactics that I did at the time of the Stratton cornering corn, when I sold oats to make the traders bearish on corn. Experience and memory again. When the insiders jacked up the price of tropical trading with a view to frightening the shorts, I didn't try to check the rise by selling that stock. I was already short 30,000 shares of it, which was as big a percentage of the floating supply as I thought wise to be short of. I did not propose to put my head into the noose so obligingly held open for me. The second rally was really an urgent invitation. What I did when TT touched 149 was to sell about 10,000 shares of Equatorial Commercial Corporation. This company owned a large block of tropical trading. Equatorial Commercial, which was not as active a stock as TT, broke badly on my 195. Reminiscences of a Stock Operator. Selling, as I had foreseen, and, of course, my purpose was achieved. When the traders and the customers of the commission houses who had listened to the uncontradicted bull. Dope on TT saw that the rise in tropical synchronized with heavy selling and a sharp break in equatorial. They naturally concluded that the strength of TT was merely a smokescreen, a manipulated advance obviously designed to facilitate inside liquidation. In equatorial commercial, which was largest holder of TT stock, it must be both long stock and inside stock in equatorial, because no outsider would dream of selling so much short stock at the very moment when tropical trading was so very strong. So they sold tropical trading and checked the rise in that stock, the insiders very properly not wishing to take all the stock that was pressed for sale. The moment the insiders took away their support, the price of TT declined. The traders and principal commission houses now sold some equatorial also, and I took in my short line in that at a small profit. I hadn't sold it to make money out of the operation but to check the rise in TT. Time and again the tropical trading insiders and their hard-working publicity man flooded the street with all manner of bull items and tried to put up the price. And every time they did, I sold equatorial commercial short and covered it with TT, reacted and carried EC with it. It took the wind out of the manipulators' sails. The price of TT finally went down to 125, and the short interest really grew so big that the insiders were enabled to run it up 20 or 25 points. This time it was a legitimate enough drive against an overextended short interest, but while I foresaw the rally I did not cover, not wishing to lose my position before equatorial commercial could advance in sympathy with the rise in TT. I sold a raft of it short with the usual results. This gave the lie to the bull talk in TT, which had got quite boisterous after the latest sensational rise. By this time the general market had grown quite weak. As I told you, it was the conviction that we were in a bear market that started me selling TT short in the fishing camp in Florida. I was short of quite a few other stocks, but TT was my pet. Finally, general conditions proved too much for the inside clique to defy, and TT hit the toboggan slide. It went below 120 for the first time in years, then below 110, below par, and still I did not cover. One day when the entire market was extremely weak, tropical trading broke 90, and on the demoralization I covered. Same old reason. I had the opportunity. The big market and the weakness and the excess of sellers over buyers. I may tell you, even at the risk of appearing to be monotonously bragging of my cleverness, that I took in my 30,000 shares of TT at practically the lowest prices of the movement. But I wasn't thinking of covering at the bottom. I was intent on turning my paper profits into cash. 196. Reminiscences of a stock operator. Without losing much of the profit in the changing, I stood pat throughout because I knew my position was sound. I wasn't bucking the trend of the market or going against basic conditions, but the reverse, and that was what made me so sure of the failure of an overconfident inside clique. What they tried to do, others had tried before, and it had always failed. The frequent rallies, even when I knew as well as anybody that they were due, could not frighten me. I knew I'd do much better in the end by staying pat than by trying to cover to put out a new short line at a higher price. By sticking to the position that I felt was right, I made over $1 million. I was not indebted to hunches or to skillful tape reading or to stubborn courage. It was a dividend declared by my faith in my judgment and not by my cleverness or by my vanity. Knowledge is power, and power need not fear lies not even when the tape prints them. The retraction follows pretty quickly. A year later, TT was jacked up again to 150 and hung around there for a couple of weeks. The entire market was entitled to a good reaction, for it had risen uninterruptedly. And it did not bull any longer. I know because I tested it. Now, the group to which TT belonged had been suffering from very poor business and I couldn't see anything to bull those stocks on anyhow, even if the rest of the market were due for a rise, which it wasn't. So I began to sell tropical trading. I intended to put out 10,000 shares in all. The price broke on my selling. I couldn't see that there was any support whatever. Then, suddenly, the character of the buying changed. I am not trying to make myself out a wizard when I assure you that I could tell the moment support came in. It instantly struck me that if the insiders in that stock, who never felt a moral obligation to keep the price up, were now buying the stock in the face of a declining general market, there must be a reason. They were not ignorant asses nor philanthropists nor yet bankers concerned with keeping the price up to sell more securities over the counter. The price rose notwithstanding my selling and the selling of others. At 153 I covered my 10,000 shares and at 156 I actually went long because by that time the tape told me the line of least resistance was upward. I was bearish on the general market, but I was confronted by a trading condition in a certain stock and not by a speculative theory in general. The price went out of sight, above 200. It was the sensation of the year. I was flattered by reports spoken and printed that I had been squeezed out of $8 or $9 million. As a matter of fact, instead of being short, I was long of TT all the way up. In fact, I held on a little too long and let some of 197. Reminiscences of a stock operator. My paper profits get away. Do you wish to know why I did? Because I thought the TT insiders would naturally do what I would have done had I been in their place. But that was something I had no business to think, because my business is to trade, that is, to stick to the facts before me and not to what I think other people ought to do. 198. Reminiscences of a stock operator. Chapter 19. I do not know when or by whom the word manipulation was first used in connection with what really are no more than common merchandising processes applied to the sale in bulk of securities on the stock exchange. Rigging the market to facilitate cheap purchases of a stock which it is desired to accumulate is also manipulation. But it is different. It may not be necessary to stoop to illegal practices, but it would be difficult to avoid doing what some would think illegitimate. How are you going to buy a big block of a stock in a bull market without putting up the price on yourself? That would be the problem. How can it be solved? It depends upon so many things that you can't give a general solution unless you say, possibly by means of very adroit manipulation. 4. Instance? Well, it would depend upon conditions. You can't give any closer answer than that. I am profoundly interested in all phases of my business, and of course I learn from the experience of others as well as from my own. But it is very difficult to learn how to manipulate stocks today from such yarns as are told of an afternoon in the brokers' offices after the close. Most of the tricks, devices, and expedients of bygone days are obsolete and futile, or illegal and impracticable. Stock exchange rules and conditions have changed, and the story, even the accurately detailed story of what Daniel Drew or Jacob Little or Jay Gould could do 50 or 75 years ago, is scarcely worth listening to. The manipulator today has no more need to consider what they did and how they did it than a cadet at West Point needs study archery as practiced by the ancients in order to increase his working knowledge of ballistics. On the other hand, there is profit in studying the human factors, the ease with which human beings believe what it pleases them to believe, and how they allow themselves, indeed, urge themselves to be influenced by their cupidity or by the dollar cost of the average man's carelessness. Fear and hope remain the same, therefore the study of the 199 Reminiscences of a Stock Operator. Psychology of speculators is as valuable as it ever was. Weapons change, but strategy remains strategy. On the New York Stock Exchange is on the battlefield. I think the clearest summing up of the whole thing was expressed by Thomas F. Woodlock when he declared, "The principles of successful stock speculation are based on the supposition that people will continue in the future to make the mistakes that they have made in the past. In booms, which is when the public is in the market in the greatest numbers, there is never any need of subtlety, so there is no sense of wasting time discussing either manipulation or speculation during such times. It would be like trying to find the difference in raindrops that are falling synchronously on the same roof across the street. The sucker has always tried to get something for nothing, and the appeal in all booms is always frankly to the gambling instinct aroused by cupidity and spurred by a pervasive prosperity. People who look for easy money invariably pay for the privilege of proving conclusively that it cannot be found on this sordid earth. At first, when I listened to the accounts of old-time deals and devices, I used to think that people were more gullible in the late 60s and 70s than in the 1900s. But I was sure to read in the newspapers that very day or the next something about the latest Ponzi or the bust-up of some bucketing broker. And about the millions of sucker money gone to join the silent majority of vanished savings. When I first came to New York, there was a great fuss made about wash sales and matched orders, for all that such practices were forbidden by the stock exchange. At times the washing was too crude to deceive anyone. The brokers had no hesitation in saying that the laundry was active whenever anybody tried to wash up some stock or other, and, as I have said before, more than once they had what were frankly referred to as bucket shop drives, when a stock was offered down 2 or 3 points in a jiffy, just to establish the decline on the tape and wipe up the myriad shoestring traders who were long of the stock in the bucket shops. As for matched orders, they were always used with some misgivings by reason of the difficulty of coordinating and synchronizing operations by brokers, all such business being against stock exchange rules. A few years ago, a famous operator cancelled the selling but not the buying part of his matched orders, and the result was that an innocent broker ran up the price 25 points or so in a few minutes, only to see it break with equal celerity as soon as his buying ceased. The original intention was to create an appearance of activity. Bad business, playing with such unreliable weapons. You see, you can't take your best brokers into your 200 Reminiscences of a Stock Operator. Confidence, not if you want them to remain members of the New York Stock Exchange. Then also, the taxes have made all practices involving fictitious transactions much more expensive than they used to be in the old times. The dictionary definition of manipulation includes corners. Now, a corner might be the result of manipulation, or it might be the result of competitive buying, as, for instance, the Northern Pacific corner on May 9, 1901, which certainly was not manipulation. The Stutz corner was expensive to everybody concerned, both in money and in prestige. And it was not a deliberately engineered corner, at that. As a matter of fact, very few of the great corners were profitable to the engineers of them. Both Commodore Vanderbilt's Harlem corners paid big, but the old chap deserved the millions he made out of a lot of short sports, crooked legislators and aldermen who tried to double-cross him. On the other hand, Jay Gould lost in his Northwestern corner. Deacon S.V. White made $1 million in his Lackawanna corner, but Jim Keene dropped $1 million in the Hannibal and St. Joe deal. The financial success of a corner, of course, depends upon the marketing of the accumulated holdings at higher than cost, and the short interest has to be of some magnitude for that to happen easily. I used to wonder why corners were so popular among the big operators of a half-century ago. They were men of ability and experience, wide awake and not prone to childlike trust in the philanthropy of their fellow traders. Yet they used to get stung with an astonishing frequency. A wise old broker told me that all the big operators of the 60s and 70s had one ambition, and that was to work a corner. In many cases this was the offspring of vanity, in others, of the desire for revenge. At all events, to be pointed out as the man who had successfully cornered this or the other stock was in reality recognition of brains, boldness and boodle. It gave the cornerer the right to be haughty. He accepted the plaudits of his fellows as fully earned. It was more than the prospective money profit that prompted the engineers of corners to do their damnedest. It was the vanity complex asserting itself among cold-blooded operators. Dog certainly ate dog in those days with relish and ease. I think I told you before that I have managed to escape being squeezed more than once, not because of the possession of a mysterious ticker sense but because I can generally tell the moment the character of the buying in the stock makes it imprudent for me to be short of it. This I do by common sense tests, which must have been tried in the old times also. Old Daniel Drew. 201. Reminiscences of a stock operator. Used to squeeze the boys with some frequency and make them pay high prices for the eerie shares they had sold short to him. He was himself squeezed by Commodore Vanderbilt and Erie, and when old Drew begged for mercy the Commodore grimly quoted the Great Bear's own deathless distich. He that sells what isn't his must buy it back or go to pre-in. Wall Street remembers very little of an operator who for more than a generation was one of its titans. His chief claim to immortality seems to be the phrase watering stock. Addison G. Jerome was the acknowledged king of the public board in the spring of 1863. His market tips, they tell me, were considered as good as cash in bank. From all accounts he was a great trader and made millions. He was liberal to the point of extravagance and had a great following in the street until Henry Keep, known as William the Silent, squeezed him out of all his millions in the old southern corner. Keep, by the way, was the brother-in-law of Governor Roswell P. Flower. In most of the old corners the manipulation consisted chiefly of not letting the other man know that you were cornering the stock which he was variously invited to sell short. It therefore was aimed chiefly at fellow professionals, for the general public does not take kindly to the short side of the account. The reasons that prompted these wise professionals to put out short lines in such stocks were pretty much the same as prompts them to do the same thing today. Apart from the selling by faith-breaking politicians in the Harlem corner of the Commodore, I gather from the stories I have read that the professional traders sold the stock because it was too high. And the reason they thought it was too high was that it never before had sold so high, and that made it too high to buy, and if it was too high to buy it was just right to sell. That sounds pretty modern, doesn't it? They were thinking of the price, and the Commodore was thinking of the value. And so, for years afterwards, old-timers tell me that people used to say, he went short of Harlem, whenever they wished to describe abject poverty. Many years ago I happened to be speaking to one of Jay Gould's old brokers. He assured me earnestly that Mr. Gould not only was a most unusual man, it was of him that old Daniel Drew shiveringly remarked, his touch is death, but that he was head and shoulders above all other manipulators past and present. He must have been a financial wizard indeed to have done what he did, there can be no question of that. Even at this distance I can see that he had an amazing knack for adapting himself to new conditions. 202. Reminiscences of a stock operator. And that is valuable in a trader. He varied his methods of attack and defense without a pang because he was more concerned with the manipulation of properties than with stock speculation. He manipulated for investment rather than for a market turn. He early saw that the big money was in owning the railroads instead of rigging their securities on the floor of the stock exchange. He utilized the stock market, of course. But I suspect it was because that was the quickest and easiest way to quick and easy money, and he needed many millions, just as old Collis P. Huntington was always hard up because he always needed 20 or 30 millions more than the bankers were willing to lend him. Vision without money means heartaches. With money, it means achievement, and that means power, and that means money, and that means achievement, and so on, over and over and over. Of course, manipulation was not confined to the great figures of those days. There were scores of minor manipulators. I remember a story an old broker told me about the manners and morals of the early 60s. He said, "The earliest recollection I have of Wall Street is of my first visit to the financial district. My father had some business to attend to there and for some reason or other took me with him. We came down Broadway and I remember turning off at Wall Street. We walked down Wall, and just as we came to Broad, or rather, Nassau Street, to the corner where the Bankers Trust Company's building now stands, I saw a crowd following 2 men. The first was walking eastward, trying to look unconcerned. He was followed by the other, a red-faced man who was wildly waving his hat with one hand and shaking the other fist in the air. He was yelling to beat the band, "Shylock! Shylock! What's the price of money? Shylock! Shylock!" I could see heads sticking out of windows. They didn't have skyscrapers in those days, but I was sure the second and third story rubbernecks would tumble out. My father asked what was the matter, and somebody answered something I didn't hear. I was too busy keeping a death clutch on my father's hand so that the jostling wouldn't separate us. The crowd was growing, as street crowds do, and I wasn't comfortable. Wild-eyed men came running down from Nassau Street and up from Broad as well as east and west on Wall Street. After we finally got out of the jam, my father explained to me that the man who was shouting Shylock was so-and-so. I have forgotten the name, but he was the biggest operator in clique stocks in the city and was understood to have made and lost more money than any other man in Wall Street, with the exception of Jacob Little. I remember Jacob Little's name because I thought it was 203. Reminiscences of a Stock Operator. Funny name for a man to have. The other man, the Shylock, was a notorious locker-up of money. His name has also gone from me. But I remember he was tall and thin and pale. In those days the cliques used to lock up money by borrowing it, or, rather, by reducing the amount available to stock exchange borrowers. They would borrow it and get a certified check. They wouldn't actually take the money out and use it. Of course that was rigging. It was a form of manipulation, I think. I agree with the old chap. It was a phase of manipulation that we don't have nowadays. I myself never spoke to any of the great stock manipulators that the street still talks about. I don't mean leaders, I mean manipulators. They were all before my time. Although when I first came to New York, James R. Keene, greatest of them all, was in his prime. But I was a mere youngster then, exclusively concerned with duplicating, in a reputable broker's office, the success I had enjoyed in the bucket shops of my native city. And then, too, at the time Keene was busy with the U.S. Steel stocks, his manipulative masterpiece. I had no experience with manipulation, no real knowledge of it or of its value or meaning, and, for that matter, no great need of such knowledge. If I thought about it at all, I suppose I must have regarded it as a well-dressed form of thimble rigging, of which the lowbrow form was such tricks as had been tried on me in the bucket shops. Such talk as I since have heard on the subject has consisted in great part of surmises and suspicions, of guesses rather than intelligent analyses. More than one man who knew him well has told me that Keene was the boldest and most brilliant operator that ever worked in Wall Street. That is saying a great deal, for there have been some great traders. Their names are now all but forgotten, but nevertheless they were kings in their day for a day. They were pulled up out of obscurity into the sunlight of financial fame by the ticker tape, and the little paper ribbon didn't prove strong enough to keep them suspended there long enough for them to become historical fixtures. At all events, Keene was by all odds the best manipulator of his day. And it was a long and exciting day. He capitalized his knowledge of the game, his experience as an operator, and his talents when he sold his services to the Havmeyer brothers, who wanted him to develop a market for the sugar stocks. He was broke at the time, or he would have continued to trade on his own hook, and he was some plunger. He was successful with sugar, made the shares trading favorites, and that made them easily vendible. After that, he was 204. Reminiscences of a Stock Operator. Asked time and again to take charge of pools. I am told that in these pool operations he never asked or accepted a fee, but paid for his share like the other members of the pool. The market conduct of the stock, of course, was exclusively in his charge. Often there was talk of treachery on both sides. His feud with the Whitney Ryan clique arose from such accusations. It is not difficult for a manipulator to be misunderstood by his associates. They don't see his needs as he himself does. I know this from my own experience. It is a matter of regret that Keene did not leave an accurate record of his greatest exploit, the successful manipulation of the U.S. Steel shares in the spring of 1901. As I understand it, Keene never had an interview with J.P. Morgan about it. Morgan's firm dealt with or through Talbot J. Taylor and Company, at whose office Keene made his headquarters. Talbot Taylor was Keene's son-in-law. I am assured that Keene's fee for his work consisted of the pleasure he derived from the work. That he made millions trading in the market he helped to put up that spring is well known. He told a friend of mine that in the course of a few weeks he sold in the open market for the underwriters' syndicate more than 750,000 shares. Not bad when you consider two things: that they were new and untried stocks of a corporation whose capitalization was greater than the entire debt of the United States at that time, and second, that men like D.G. Reed, W.E.B. Leeds, the Moore brothers, Henry Phipps, H.C. Frick, and the other steel magnates also sold hundreds of thousands of shares to the public at the same time in the same market that Keene helped to create. Of course, general conditions favored him. Not only actual business but sentiment and his unlimited financial backing made possible his success. What we had was not merely a big bull market but a boom and a state of mind not likely to be seen again. The undigested securities panic came later, when Steel Common, which Keene had marked up to 55 in 1901, sold at 10 in 1903 and at 8 7/8 in 1904. We can't analyze Keene's manipulative campaigns. His books are not available. The adequately detailed record is non-existent. For example, it would be interesting to see how he worked in Amalgamated Copper. H. Rogers and William Rockefeller had tried to dispose of their surplus stock in the market and had failed. Finally, they asked Keene to market their line, and he agreed. Bear in mind that H. Rogers was one of the ablest businessmen of his day in Wall Street, and that William Rockefeller was the boldest speculator of the entire Standard Oil coterie. They had practically unlimited. 205. Reminiscences of a stock operator. Resources and vast prestige as well as years of experience in the stock market game. And yet they had to go to Keene. I mention this to show you that there are some tasks which it requires a specialist to perform. Here was a widely touted stock, sponsored by America's greatest capitalists, that could not be sold except at a great sacrifice of money and prestige. Rogers and Rockefeller were intelligent enough to decide that Keene alone might help them. Keene began to work at once. He had a bull market to work in and sold 220,000 shares of Amalgamated at around par. After he disposed of the insiders' line, the public kept on buying and the price went 10 points higher. Indeed, the insiders got bullish on the stock they had sold when they saw how eagerly the public was taking it. There was a story that Rogers actually advised Keene to go long of Amalgamated. It is scarcely credible that Rogers meant to unload on Keene. He was too shrewd a man not to know that Keene was no bleeding lamb. Keene worked as he always did, that is, doing his big selling on the way down after the big rise. Of course, his tactical moves were directed by his needs and by the minor currents that changed from day to day. In the stock market, as in warfare, it is well to keep in mind the difference between strategy and tactics. One of Keene's confidential men, he is the best fly fisherman I know, told me only the other day that during the Amalgamated campaign Keene would find himself almost out of stock one day, that is, out of the stock he had been forced to take in marking up the price, and on the next day he would buy back thousands of shares. On the day after that, he would sell on balance. Then he would leave the market absolutely alone, to see how it would take care of itself and also to accustom it to do so. When it came to the actual marketing of the line, he did what I told you, he sold it on the way down. The trading public is always looking for a rally, and, besides, there is the covering by the shorts. The man who was closest to Keene during that deal told me that after Keene sold the Rogers Rockefeller line for something like $20 or $25 million in cash, Rogers sent him a check for $200,000. This reminds you of the millionaire's wife who gave the Metropolitan Opera House scrubwoman 50 cents reward for finding the $100,000 pearl necklace. Keene sent the check back with a polite note saying he was not a stockbroker and that he was glad to have been of some service to them. They kept the check and wrote him that they would be glad to work with him again. Shortly after that, it was that H.H. Rogers gave Keene the friendly tip to 206. Reminiscences of a Stock Operator. By Amalgamated at around 130. A brilliant operator, James R. Keene. His private secretary told me that when the market was going his way, Mr. Keene was irascible, and those who knew him say his irascibility was expressed in sardonic phrases that lingered long in the memory of his hearers. But when he was losing, he was in the best of humor, a polished man of the world. Agreeable, epigrammatic, interesting. He had in superlative degree the qualities of mind that are associated with successful speculators anywhere. That he did not argue with the tape is plain. He was utterly fearless but never reckless. He could and did turn in a twinkling if he found he was wrong. Since his day, there have been so many changes in stock exchange rules and so much more rigorous enforcement of old rules, so many new taxes on stock sales and profits, and so on, that the game seems different. Devices that Keene could use with skill and profit can no longer be utilized. Also, we are assured, the business morality of Wall Street is on a higher plane. Nevertheless, it is fair to say that in any period of our financial history, Keene would have been a great manipulator because he was a great stock operator and knew the game of speculation from the ground tip. He achieved what he did because conditions at the time permitted him to do so. He would have been as successful in his undertakings in 1922 as he was in 1901 or in 1876, when he first came to New York from California and made $9 million in 2 years. There are men whose gait is far quicker than the mob's. They are bound to lead no matter how much the mob changes. As a matter of fact, the change is by no means as radical as you'd imagine. The rewards are not so great, for it is no longer pioneer work and therefore it is not pioneer's pay. But in certain respects manipulation is easier than it was, in other ways much harder than in Keynes' day. There is no question that advertising is an art, and manipulation is the art of advertising. Through the medium of the tape. The tape should tell the story the manipulator wishes its readers to see. The truer the story, the more convincing it is bound to be, and the more convincing it is, the better the advertising is. A manipulator today, for instance, has not only to make a stock look strong but also to make it be strong. Manipulation, therefore, must be based on sound trading principles. That is what made Keynes such a marvelous 207. Reminiscences of a stock operator. Manipulator, he was a consummate trader to begin with. 208. Reminiscences of a stock operator. Chapter 20. The word manipulation has come to have an ugly sound, it needs an alias. I do not think there is anything so very mysterious or crooked about the process itself when it has for an object the selling of a stock in bulk, provided, of course, that such operations are not accompanied by misrepresentation. There is little question that a manipulator necessarily seeks his buyers among speculators. He turns to men who are looking for big returns on their capital and are therefore willing to run a greater than normal business risk. I can't have much sympathy for the man who, knowing this, nevertheless blames others for his own failure to make easy money. He is a devil of a clever fellow when he wins. But when he loses money, the other fellow was a crook, a manipulator. In such moments and from such lips the word connotes the use of marked cards. But this is not so. Usually the object of manipulation is to develop marketability, that is, the ability to dispose of fair-sized blocks at some price at any time. Of course a pool, by reason of a reversal of general market conditions, may find itself unable to sell except at a sacrifice too great to be pleasing. They then may decide to employ a professional, believing that his skill and experience will enable him to conduct an orderly retreat instead of suffering an appalling rout. You will notice that I do not speak of manipulation designed to permit considerable accumulation of a stock as cheaply as possible, as, for instance, in buying for control. Because this does not happen often nowadays. When Jay Gould wished to cinch his control of Western Union and decided to buy a big block of the stock, Washington E. Connor, who had not been seen on the floor of the stock exchange for years, suddenly showed up in person at the Western Union Post. He began to bid for Western Union. The traders to a man laughed at his stupidity in thinking. 209. Reminiscences of a stock operator. Them so simple, and they cheerfully sold him all the stock he wanted to buy. It was too raw a trick to think he could put up the price by acting as though Mr. Gould wanted to buy Western Union. Was that manipulation? I think I can only answer that by saying no and yes. In the majority of cases, the object of manipulation is, as I said, to sell stock to the public at the best possible price. It is not alone a question of selling but of distributing. It is obviously better in every way for a stock to be held by 1,000 people than by one. man better for the market in it. So it is not alone the sale at a good price but the character of the distribution that a manipulator must consider. There is no sense in marking up the price to a very high level if you cannot induce the public to take it off your hands later. Whenever inexperienced manipulators try to unload at the top and fail, old-timers look mighty wise and tell you that you can lead a horse to water but you cannot make him drink. Original devils. As a matter of fact, it is well to remember a rule of manipulation, a rule that Keene and his able predecessors well knew. It is this: stocks are manipulated to the highest point possible and then sold to the public on the way down. Let me begin at the beginning. Assume that there is someone, an underwriting syndicate or a pool or an individual that has a block of stock which it is desired to sell at the best price possible. It is a stock duly listed on the New York Stock Exchange. The best place for selling it ought to be the open market, and the best buyer ought to be the general public. The negotiations for the sale are in charge of a man. He or some present or former associate has tried to sell the stock on the stock exchange and has not succeeded. He is or soon becomes sufficiently familiar with stock market operations to realize that more experience and greater aptitude for the work are needed than he possesses. He knows personally or by hearsay several men who have been successful in their handling of similar deals, and he decides to avail himself of their professional skill. He seeks one of them as he would seek a physician if he were ill or an engineer if he needed that kind of expert. Suppose he has heard of me as a man who knows the game. Well, I take it that he tries to find out all he can about me. He then arranges for an interview, and in due time calls at my office. Of course, the chances are that I know about the stock and what it represents. It is my 210 Reminiscences of a Stock Operator. Business to know. That is how I make my living. My visitor tells me what he and his associates wish to do, and asks me to undertake the deal. It is then my turn to talk. I ask for whatever information I deem necessary to give me a clear understanding of what I am asked to undertake. I determine the value and estimate the market possibilities of that stock. That and my reading of current conditions in turn help me to gauge the likelihood of success for the proposed operation. If my information inclines me to a favorable view, I accept the proposition and tell him then and there what my terms will be for my services. If he in turn accepts my terms, the honorarium and the conditions, I begin my work at once. I generally ask and receive calls on a block of stock. I insist upon graduated calls as the fairest to all concerned. The price of the call begins at a little below the prevailing market price and goes up. Say, for example, that I get calls on 100,000 shares and the stock is quoted at 40. I begin with a call for some thousands of shares at 35, another at 37, another at 40, and at 45 and 50, and so on up to 75 or 80. If as the result of my professional work, my manipulation, the price goes up, and if at the highest level there is a good demand for the stock so that I can sell fair-sized blocks of it, I of course call the stock. I am making money, but so are my clients making money. This is as it should be. If my skill is what they are paying for, they ought to get value. Of course, there are times when a pool may be wound up at a loss, but that is seldom, for I do not undertake the work unless see my way clear to a profit. This year I was not so fortunate in one or two deals, and I did not make a profit. There are reasons, but that is another story, to be told later perhaps. The first step in a bull movement in a stock is to advertise the fact that there is a bull movement on. Sounds silly, doesn't it? Well, think a moment. It isn't as silly as it sounded, is it? The most effective way to advertise what, in effect, are your honorable intentions is to make the stock active and strong. After all is said and done, the greatest publicity agent in the wide world is the ticker, and by far the best advertising medium is the tape. I do not need to put out any literature for my clients. I do not have to inform the daily press as to the value of the stock or to work the financial reviews for notices about the company's prospects. Neither do I have to get a following. I accomplish all these. 211. Reminiscences of a stock operator. Highly desirable things by merely making the stock active. When there is activity, there is a synchronous demand for explanations, and that means, of course, that the necessary reasons for publication supply themselves without the slightest aid from me. Activity is all that the floor traders ask. They will buy or sell any stock at any level if only there is a free market for it. They will deal in thousands of shares wherever they see activity, and their aggregate capacity is considerable. It necessarily happens that they constitute the manipulator's first crop of buyers. They will follow you all the way up, and they thus are a great help at all the stages of the operation. I understand that James R. Keene used habitually to employ the most active of the room traders, both to conceal the source of the manipulation and also because he knew that they were by far the best business spreaders and tip distributors. He often gave calls to them, verbal calls above the market, so that they might do some helpful work before they could cash in. He made them earn their profit. To get a professional following, I myself have never had to do more than to make a stock active. Traders don't ask for more. It is well, of course, to remember that these professionals on the floor of the exchange buy stocks with the intention of selling them at a profit. They do not insist on its being a big profit, but it must be a quick profit. I make the stock active in order to draw the attention of speculators to it, for the reasons I have given. I buy it and I sell it, and the traders follow suit. The selling pressure is not apt to be strong where a man has as much speculatively held stock sewed up in calls as I insist on having. The buying, therefore, prevails over the selling, and the public follows the lead, not so much of the manipulator as of the room traders. It comes in as a buyer. This highly desirable demand I fill, that is, I sell stock on balance. If the demand is what it ought to be, it will absorb more than the amount of stock I was compelled to accumulate in the earlier stages of the manipulation, and when this happens, I sell the stock short, that is, technically. In other words, I sell more stock than I actually hold. It is perfectly safe for me to do so, since I am really selling against my calls. Of course, when the demand from the public slackens, the stock ceases to advance. Then I wait. Say, then, that the stock has ceased to advance. There comes a weekday. The entire market may develop a reactionary tendency, or some sharp-eyed trader might perceive that there are no buying orders to speak of in my stock, and he sells it, and his fellows follow. Whatever the reason may be, my stock starts to go down. Well, I begin to buy it. I give it the support that a stock ought to have if it is in good odor with its own. 212. Reminiscences of a stock operator. Sponsors. And more, I am able to support it without accumulating it, that is, without increasing the amount I shall have to sell later on. Observe that I do this without decreasing my financial resources. Of course, what I am really doing is covering stock I sold short at higher prices when the demand from the public or from the traders or from both enabled me to do it. It is always well to make it plain to the traders and to the public also that there is a demand for the stock on the way down. That tends to check both reckless short selling by the professionals and liquidation by frightened holders. which is the selling you usually see when a stock gets weaker and weaker, which in turn is what a stock does when it is not supported. These covering purchases of mine constitute what I call the stabilizing process. As the market broadens, I of course sell stock on the way up, but never enough to check the rise. This is in strict accordance with my stabilizing plans. It is obvious that the more stock I sell on a reasonable and orderly advance, the more I encourage the conservative speculators, who are more numerous than the reckless room traders, and in addition the more support I shall be able to give to the stock on the inevitable weak days. By always being short, I always am in a position to support the stock without danger to myself. As a rule, I begin my selling at a price that will show me a profit. But I often sell without having a profit, simply to create or to increase what I may call my riskless buying power. My business is not alone to put up the price or to sell a big block of stock for a client, but to make money for myself. That is why I do not ask any clients to finance my operations. My fee is contingent upon my success. Of course, what I have described is not my invariable practice. I neither have nor adhere to an inflexible system. I modify my terms and conditions according to circumstances. A stock which it is desired to distribute should be manipulated to the highest possible point and then sold. I repeat this both because it is fundamental and because the public apparently believes that the selling is all done at the top. Sometimes a stock gets waterlogged, as it were, it doesn't go up. That is the time to sell. The price naturally will go down on your selling rather further than you wish, but you can generally nurse it back. As long as the stock that I am manipulating goes up on my buying, I know I am all hunky, and if need be I buy it with confidence and use my own money without fear. Precisely as I would any other stock that acts the same way. It is the line of least resistance. You remember my trading theories about that line, don't you? Well, when the price line of least resistance is established, I follow it, not because I am manipulating that. 213. Reminiscences of a stock operator. Particular stock at that particular moment, but because I am a stock operator at all times. When my buying does not put the stock up, I stop buying and then proceed to sell it down, and that also is exactly what I would do with that same stock if I did not happen to be manipulating it. The principal marketing of the stock, as you know, is done on the way down. It is perfectly astonishing how much stock a man can get rid of on a decline. I repeat that at no time during the manipulation do I forget to be a stock trader. My problems as a manipulator, after all, are the same that confront me as an operator. All manipulation comes to an end when the manipulator cannot make a stock do what he wants it to do. When the stock you are manipulating doesn't act as it should, quit. Don't argue with the tape. Do not seek to lure the profit back. Quit while the quitting is good and cheap. 214. Reminiscences of a stock operator. Chapter 21. I am well aware that all these generalities do not sound especially impressive. Generalities seldom do. Possibly I may succeed better if I give a concrete example. I'll tell you how I marked up the price of a stock 30 points, and in so doing accumulated only 7,000 shares and developed a market that would absorb almost any amount of stock. It was Imperial Steel. The stock had been brought out by reputable people and it had been fairly well tipped as a property of value. About 30% of the capital stock was placed with the general public through various Wall Street houses, but there had been no significant activity in the shares after they were listed. From time to time somebody would ask about it, and one or another insider members of the original underwriting syndicate would say that the company's earnings were better than expected and the Prospects more than encouraging. This was true enough and very good as far as it went. But not exactly thrilling. The speculative appeal was absent, and from the investors' point of view, the price stability and dividend permanency of the stock were not yet demonstrated. It was a stock that never behaved sensationally. It was so gentlemanly that no corroborative rise ever followed the insiders' eminently truthful reports. On the other hand, neither did the price decline. Imperial Steel remained unhonored and unsung and untipped, content to be one of those stocks that don't go down because nobody sells, and that nobody sells because nobody likes to go short of a stock that is not well distributed. The seller is too much at the mercy of the loaded up inside clique. Similarly, there is no inducement to buy such a stock. To the investor, Imperial Steel therefore remained a speculation. To the speculator, it was a dead one, the kind that makes an investor of you against your will by the simple expedient of falling into a trance the moment you go long of it. The chap who is compelled to lug a corpse a year or two always loses more than the original cost of the 215. Reminiscences of a stock operator. Deceased, he is sure to find himself tied up with it when some really good things come his way. One day, the foremost member of the Imperial Steel Syndicate, acting for himself and associates, came to see me. They wished to create a market for the stock, of which they controlled the undistributed 70%. They wanted me to dispose of their holdings at better prices than they thought they would obtain if they tried to sell in the open market. They wanted to know on what terms I would undertake the job. I told him that I would let him know in a few days. Then I looked into the property. I had experts go over the various departments of the company: industrial, commercial, and financial. They made reports to me which were unbiased. I wasn't looking for the good or the bad points, but for the facts such as they were. The reports showed that it was a valuable property. The prospects justified purchases of the stock at the prevailing market price if the investor were willing to wait a little. Under the circumstances, an advance in the price would in reality be the commonest and most legitimate of all market movements, to wit, the process of discounting the future. There was therefore no reason that I could see why I should not conscientiously and confidently undertake the bull manipulation of Imperial Steel. I let my man know my mind, and he called at my office to talk the deal over in detail. I told him what my terms were. For my services I asked no cash, but calls on 100,000 shares of the Imperial Steel stock. The price of the calls ran up from 70 to 100. That may seem like a big fee to some, but they should consider that the insiders were certain they themselves could not sell 100,000 shares, or even 50,000 shares, at 70. There was no market for the stock. All the talk about wonderful earnings and excellent prospects had not brought in buyers, not to any great extent. In addition, I could not get my fee in cash without my clients first making some millions of dollars. What I stood to make was not an exorbitant selling commission. It was a fair contingent fee. Knowing that the stock had real value and that general market conditions were bullish and therefore favorable for an advance in all good stocks, I figured that I ought to do pretty well. My clients were encouraged by the opinions I expressed, agreed to my terms at once, and the deal began with pleasant feelings all around. 216. Reminiscences of a stock operator. I proceeded to protect myself as thoroughly as I could. The syndicate owned or controlled about 70% of the outstanding stock. I had them deposit their 70% under a trust agreement. I didn't propose to be used as a dumping ground for the big holders. With the majority holdings thus securely tied up, I still had 30% of Scattered holdings to consider, but that was a risk I had to take. Experienced speculators. Do not expect ever to engage in utterly riskless ventures. As a matter of fact, it was not much more likely that all the untrusted stock would be thrown on the market at one fell swoop than that all the policyholders of a life insurance company would die at the same hour, the same day. There are unprinted actuarial tables of stock market risks as well as of human mortality. Having protected myself from some of the avoidable dangers of a stock market deal of that sort, I was ready to begin my campaign. Its objective was to make my calls valuable. To do this, I must put up the price and develop a market in which I could sell 100,000 shares the stock in which I held options. The first thing I did was to find out how much stock was likely to come on the market on an advance. This was easily done through my brokers, who had no trouble in ascertaining what stock was for sale at or a little above the market. I don't know whether the specialists told them what orders they had on their books or not. The price was nominally 70, but I could not have sold 1,000 shares at that price. I had no evidence of even a moderate demand at that figure or even a few points lower. I had to go by what my brokers found out. But it was enough to show me how much stock there was for sale and how little was wanted. As soon as I had a line on these points, I quietly took all the stock that was for sale at 70 and higher. When I say I, you will understand that I mean my brokers. The sales were for account of some of the minority holders because my clients naturally had cancelled whatever selling orders they might have given out before they tied up their stock. I didn't have to buy very much stock. Moreover, I knew that the right kind of advance would bring in other buying orders and, of course, selling orders also. I didn't give bull tips on Imperial Steel to anybody. I didn't have to. My job was to seek directly to influence sentiment by the best possible kind of publicity. I do not say that there should never be bull propaganda. It is as legitimate and indeed as desirable to advertise the value of a new stock as to advertise the value of woolens or shoes or 217. Reminiscences of a stock operator. Automobiles. Accurate and reliable information should be given by the public. But what I meant was that the tape did all that was needed for my purpose. As I said before, the reputable newspapers always try to print explanations for market movements. It is news. Their readers demand to know not only what happens in the stock market but why it happens. Therefore, without the manipulator lifting a finger, the financial writers will print all the available information and gossip, and also analyze the reports of earnings, trade condition and outlook, in short, whatever may throw light on the advance. Whenever a newspaperman or an acquaintance asks my opinion of a stock and I have one, I do not hesitate to express it. I do not volunteer advice and I never give tips, but I have nothing to gain in my operations from secrecy. At the same time, I realize that the best of all tipsters, the most persuasive of all salesmen, is the tape. When I had absorbed all the stock that was for sale at 70 and a little higher, I relieved the market of that pressure, and naturally that made clear for trading purposes the line of least resistance in Imperial Steel. It was manifestly upward. The moment that fact was perceived by the observant traders on the floor, they logically assumed that the stock was in for an advance, the extent of which they could not know, but they knew enough to begin buying. Their demand for Imperial Steel, created exclusively by the obviousness of the stock's rising tendency, the tape's infallible bull tip, I promptly filled. I sold to the traders the stock that I had bought from the tired-out holders at the beginning. Of course, this selling was judiciously done. I contented myself with supplying the demand. I was not forcing my stock on the market, and I did not want too rapid an advance. It wouldn't have been good business to sell out the half of my 100,000 shares at that stage of the proceedings. My job was to make a market on which I might sell my entire line. But even though I sold only as much as the traders were anxious to buy, the market was temporarily deprived of my own buying power, which I had hitherto exerted steadily. In due course, the traders' purchases ceased and the price stopped rising. As soon as that happened, there began the selling by disappointed bulls, or by those traders whose reasons for buying disappeared the instant the rising tendency was checked. But I was ready for this selling, and on the way down I bought back the stock I had sold to the traders a couple of points higher. This buying of stock I knew was bound to be sold in turn checked the downward course, and when the price stopped going down, the selling orders stopped coming in. 218. Reminiscences of a stock operator. I then began all over again. I took all the stock that was for sale. On the way up it wasn't very much, and the price began to rise a second time from a higher starting point then. 70. Don't forget that on the way down there are many holders who wish to heaven they had sold theirs, but won't do it 3 or 4 points from the top. Such speculators always vow they will surely sell out if there is a rally. They put in their orders to sell on the way up, and then they change their minds with the change in the stock's price trend. Of course, there is always profit taking from safe playing quick runners, to whom a profit is always a profit to be taken. All I had to do after that was to repeat the process, alternately buying and selling, but always working higher. Sometimes, after you have taken all the stock that is for sale, it pays to rush up the price sharply, to have what might be called little bull flurries in the stock you are manipulating. It is excellent advertising, because it makes talk and also brings in both the professional traders and that portion of the speculating public that likes action. It is, I think, a large portion. I did that in Imperial Steel, and whatever demand was created by those spurts I supplied. My selling always kept the upward movement within bounds, both as to extent and as to speed. In buying on the way down and selling on the way up, I was doing more than marking up the price. I was developing the marketability of Imperial Steel. After I began my operations in it, there never was a time when a man could not buy or sell the stock freely. I mean by this, buy or sell a reasonable amount without causing over-violent fluctuations in the price. The fear of being left high and dry if he bought, or squeezed to death if he sold, was gone. The gradual spread among the professionals and the public of a belief in the permanence of the market for Imperial Steel had much to do with creating confidence in the movement, and, of course, the activity also put an end to a lot of other objections. The result was that after buying and selling a good many thousands of shares, I succeeded in making the stock sell at par. At $100 a share, everybody wanted to buy Imperial Steel. Why not? Everybody now knew that it was a good stock, that it had been and still was a bargain. The proof was the rise. A stock that could go 30 points from 70 could go up 30 more from par. That is the way a good many argued. In the course of marking up the price those 30 points, I accumulated only 7. 219. Reminiscences of a stock operator. 1,000 shares. The price on this line averaged me almost exactly 85. That meant a profit of 15 points on it, but, of course, my entire profit, still on paper, was much more. It was a safe enough profit, for I had a market for all I wanted to sell. The stock would sell higher on judicious manipulation, and I had graduated calls on 100,000 shares beginning at 70 and ending at 100. Circumstances prevented me from carrying out certain plans of mine for converting my paper profits into good hard cash. It had been, if I do say so myself, a beautiful piece of manipulation, strictly legitimate and deservedly successful. The property of the company was valuable and the stock was not dear at the higher price. One of the members of the original syndicate developed a desire to secure the control of the property, a prominent banking house with ample resources. The control of a prosperous and growing concern like the Imperial Steel Corporation is possibly more valuable to a banking firm than to individual investors. At all events, this firm made me an offer for all my options on the stock. It meant an enormous profit for me, and I instantly took it. I am always willing to sell out when I can do so in a lump at a good profit. I was quite content with what I made out of it. Before I disposed of my calls on the 100,000 shares, I learned that these bankers had employed more experts to make a still more thorough examination of the property. Their reports showed enough to bring me in the offer I got. I kept several thousand shares of the stock for investment. I believe in it. There wasn't anything about my manipulation of Imperial Steel that wasn't normal and sound. As long as the price went up on my buying, I knew I was okay. The stock never got waterlogged, as a stock sometimes does. When you find that it fails to respond adequately to your buying, you don't need any better tip to sell. You know that if there is any value to a stock and general market conditions are right, you can always nurse it back after a decline, no matter if it's 20 points. But I never had to do anything like that in Imperial Steel. In my manipulation of stocks, I never lose sight of basic trading principles. Perhaps you wonder why I repeat this, or why I keep on harping on the fact that I never argue with the tape or lose my temper at the market because of its behavior. You would think, wouldn't you, that shrewd men who have made millions in their own business and in addition have successfully operated in Wall Street at times would realize the wisdom of playing. 220. Reminiscences of a stock operator. The game dispassionately. Well, you would be surprised at the frequency with which some of our most successful promoters behave like peevish women because the market does not act the way they wish it to act. They seem to take it as a personal slight, and they proceed to lose money by first losing their temper. There has been much gossip about a disagreement between John Prentice and myself. People have been led to expect a dramatic narrative of a stock market deal that went wrong, or some double-crossing that cost me or him millions, or something of that sort. Well, it wasn't. Prentice and I had been friendly for years. He had given me at various times information that I was able to utilize profitably, and I had given him advice which he may or may not have followed. If he did, he saved money. He was largely instrumental in the organization and promotion of the Petroleum Products Company. After a more or less successful market debut, general conditions changed for the worse, and the new stock did not fare as well as Prentice and his associates had hoped. When basic conditions took a turn for the better, Prentice formed a pool and began operations in peat products. I cannot tell you anything about his technique. He didn't tell me how he worked and I didn't ask him. But it was plain that notwithstanding his Wall Street experience and his undoubted cleverness, whatever it was he did proved of little value, and it didn't take the pool long to find out that they couldn't get rid of much stock. He must have tried every thing he knew. Because a pool manager does not ask to be superseded by an outsider unless he feels unequal to the task, and that is the last thing the average man likes to admit. At all events, he came to me, and after some friendly preliminaries he said he wanted me to take charge of the market for peat products and dispose of the pool's holdings, which amounted to a little over 100,000 shares. The stock was selling at 102 to 103. The thing looked dubious to me and I declined his proposition with thanks. But he insisted that I accept. He put it on personal grounds, so that in the end I consented. I constitutionally dislike to identify myself with enterprises in the success of which I cannot feel confidence, but I also think a man owes something to his friends and acquaintances. I said I would do my best, but I told him I did not feel very cocky about it. And I enumerated the adverse factors that I would have to contend with. But all Prentice. 221. Reminiscences of a stock operator. Said to that was that he wasn't asking me to guarantee millions in profits to the pool. He was sure that if I took hold I'd make out well enough to satisfy any reasonable being. Well, there I was, engaged in doing something against my own judgment. I found, as I feared, a pretty tough state of affairs, due in great measure to Prentice's own mistakes, while he was manipulating the stock for account of the pool. But the chief factor against me was time. I was convinced that we were rapidly approaching the end of a bull swing, and therefore that the improvement in the market, which had so encouraged Prentice, would prove to be merely a short-lived rally. I feared that the market would turn definitely bearish before I could accomplish much with peat products. However, I had given my promise and I decided to work as hard as I knew how. I started to put up the price. I had moderate success. I think I ran it up to 107 or thereabouts, which was pretty fair, and I was even able to sell a little stock on balance. It wasn't much, but I was glad not to have increased the pool's holdings. There were a lot of people not in the pool who were just waiting for a small rise to dump their stock, and I was a godsend to them. Had general conditions been better, I also would have done better. It was too bad that I wasn't called in earlier. All I could do now, I felt, was to get out with as little loss as possible to the pool. I sent for Prentice and told him my views. But he started to object. I then explained to him why I took the position I did. I said, "Prentice, I can feel very plainly the pulse of the market. There is no follow-up in your stock. It is no trick to see just what the public's reaction is to my manipulation. Listen, when peat products is made as attractive to traders as possible and you give it all the support needed at all times and notwithstanding all that you find that the public leaves it alone, you may be sure that there is something wrong, not with the stock but with the market. There is absolutely no use in trying to force matters. You are bound to lose if you do. A pool manager should be willing to buy his own stock when he is company. But when he is the only buyer in the market, he'd be asked to buy it. For every 5,000 shares I buy, the public ought to be willing or able to buy 5,000 more. But I certainly am not going to do all the buying. If I did, all I would succeed in doing would be to get soaked with a lot of long stock that I don't want. There is only one thing to do, and that is to sell. And the only way to sell is to sell. You mean, sell for what you can get? Asked Prentice. 222. Reminiscences of a stock operator. Right. I said. I could see he was getting ready to object. If I am to sell the pool stock at all, you can make up your mind that the price is going to break through par and... Oh, no. Never, he yelled. You'd have imagined I was asking him to join a suicide club. Prentice, I said to him, it is a cardinal principle of stock manipulation to put up a stock in order to sell it. But you don't sell in bulk on the advance. You can't. The big selling is done on the way down from the top. I cannot put up your stock to 125 or 130. I'd like to, but it can't be done. So you will have to begin your selling from this level. In my opinion, all stocks are going down, and petroleum products isn't going to be the one exception. It is better for it to go down now on the pools selling than for it to break next month on selling by someone else. It will go down anyhow. I can't see that I said anything harrowing, but you could have heard his howls in China. He simply wouldn't listen to such a thing. It would never do. It would play the dickens with the stock's record, to say nothing of inconvenient possibilities at the banks where the stock was held as collateral on loans, and so on. I told him again that in my judgment nothing in the world could prevent peat products from breaking 15 or 20 points, because the entire market was headed that way. And I once more said it was absurd to expect his stock to be a dazzling exception. But again my talk went for nothing. He insisted that I support the stock. Here was a shrewd businessman, one of the most successful promoters of the day, who had made millions in Wall Street deals and knew much more than the average man about the game of speculation, actually insisting on supporting a stock in an incipient bear market. It was his stock, to be sure, but it was nevertheless bad business. So much so that it went against the grain, and I again began to argue with him. But it was no use. He insisted on putting in supporting orders. Of course, when the general market got weak and the decline began in earnest, peat products went with the rest. Instead of selling, I actually bought stock for the insiders. Pool by Prentice orders. The only explanation is that Prentice did not believe the bear market was right on top of us. I myself was confident that the bull market was over. I had verified my first surmise. 223. Reminiscences of a stock operator. By tests not alone in peat products but in other stocks as well. I didn't wait for the bear market to announce its safe arrival before I started selling. Of course I didn't sell a share of peat products, though I was short of other stocks. The peat products pool, as I expected, was hung up with all they held to begin with and with all they had to take in their futile effort to hold up the price. In the end they did liquidate, but at much lower figures than they would have got if Prentice had let me sell when and as I wished. It could not be otherwise. But Prentice still thinks he was right, or says he does. I understand he says the reason I gave him the advice I did was that I was short of other stocks and the general market was going up. It implies, of course, that the break in peat products that would have resulted from selling out the pool's holdings at any price would have helped my bear position in other stocks. That is all tommyrot. I was not bearish because I was short of stocks. I was bearish because that was the way I sized up the situation, and I sold stocks short only after I turned bearish. There never is much money in doing things wrong, and not in the stock market. My plan for selling the pool's stock was based on what the experience of 20 years told me alone was feasible and therefore wise. Prentice ought to have been enough of a trader to see it as plainly as I did. It was too late to try to do anything else. I suppose Prentice shares the delusion of thousands of outsiders who think a manipulator can do anything. He can't. The biggest thing Keene did was his manipulation of U.S. Steel common and preferred in the spring of 1901. He succeeded not because he was clever and resourceful, and not because he had a syndicate of the richest men in the country back of him. He succeeded partly because of those reasons, but chiefly because the general market was right and the public state of mind was right. It isn't good business for a man to act against the teachings of experience and against common sense. But the suckers in Wall Street are not all outsiders. Prentice grievance against me is what I have just told you. He feels sore because I did my manipulation not as I wanted to but as he asked me to. There isn't anything mysterious or underhanded or crooked about manipulation designed to sell a stock in bulk, provided such operations are not accompanied by deliberate misrepresentations. Sound manipulation must be based on sound trading principles. People lay great stress on old-time practices, such as wash sales. But I can assure you that the mere mechanics of deception count for very little. The difference between stock. 224. Reminiscences of a stock operator. Market manipulation and the over-the-counter sale of stocks and bonds is in the character of the clientele rather than in the character of the appeal. J. P. Morgan and Company. Sell an issue of bonds to the public, that is, to investors. A manipulator disposes of a block of stock to the public, that is, to speculators. An investor looks for safety, for permanence of the interest return on the capital he invests. The speculator looks for a quick profit. The manipulator necessarily finds his primary market among speculators who are willing to run a greater than normal business risk so long as they have a reasonable chance to get a big return on their capital. I myself never have believed in blind gambling. I may plunge or I may buy 100 shares. But in either case I must have a reason for what I do. I distinctly remember how I got into the game of manipulation, that is, in the marketing of stocks for others. It gives me pleasure to recall it because it shows so beautifully the professional Wall Street attitude towards stock market operations. It happened after I had come back, that is, after my Bethlehem steel trade in 1915 started me on the road to financial recovery. I traded pretty steadily and had very good luck. I have never sought newspaper publicity. But neither have I gone out of my way to hide myself. At the same time, you know that professional Wall Street exaggerates both the successes and the failures of whichever operator happens to be active. And, of course, the newspapers hear about him in print. Rumors. I have been broke so many times, according to the gossips, or have made so many millions, according to the same authorities, that my only reaction to such reports is to wonder how and where they are born, and how they grow. I have had broker friend after broker friend bring the same story to me, a little changed each time, improved, more circumstantial. All this preface is to tell you how I first came to undertake the manipulation of a stock for someone else. The stories the newspapers printed of how I had paid back in full the millions I owed did the trick. My plungings and my winnings were so magnified by the newspapers that I was talked about in Wall Street. The day was past when an operator swinging a line of 200,000 shares of stock could dominate the market. But, as you know, the public always desires to find successors to the old leaders. It was Mr. Keene's reputation as a skillful stock operator, a winner of millions on his own hook. 225. Reminiscences of a stock operator. That made promoters and banking houses apply to him for selling large blocks of securities. In short, his services as manipulator were in demand because of the stories the Street had heard about his previous successes as a trader. But Keene was gone past on to that heaven where he once said he wouldn't stay a moment unless he found Sissenby there waiting for him. 2 or 3 other men who made stock market history for a few months had relapsed into the obscurity of prolonged inactivity. I refer particularly to certain of those plunging Westerners who came to Wall Street in 1901 and after making many millions out of their steel holdings, remained in Wall Street. They were in reality super promoters rather than operators of the Keene type. But they were extremely able, extremely rich, and extremely successful in the securities of the companies which they and their friends controlled. They were not really great manipulators like Keene or Governor Flower. Still, the Street found in them Plenty to gossip about, and they certainly had a following among the professionals and the sportier commission houses. After they ceased to trade actively, the street found itself without manipulators. At least, it couldn't read about them in the newspapers. You remember the big bull market that began when the stock exchange resumed business in 1915. As the market broadened and the Allies' purchases in this country mounted into billions, we ran into a boom. As far as manipulation went, it wasn't necessary for anybody to lift a finger to create an unlimited market for a war bride. Scores of men made millions by capitalizing contracts or even promises of contracts. They became successful promoters either with the aid of friendly bankers or by bringing out their companies on the curb market. The public bought anything that was adequately touted. When the bloom wore off the boom, some of these promoters found themselves in need of help from experts in stock salesmanship. When the public is hung up with all kinds of securities, some of them purchased at higher prices, it is not an easy task to dispose of untried stocks. After a boom, the public is positive that nothing is going up. It isn't that buyers become more discriminating, but that the blind buying is over. It is the state of mind that has changed. Prices don't even have to go down to make people pessimistic. It is enough if the market gets dull and stays dull for a time. In every boom, companies are formed primarily, if not exclusively, to take advantage of the public's appetite for all kinds of stocks. Also, there are belated promotions. The 226 Reminiscences of a Stock Operator. Reason why promoters make that mistake is that, being human, they are unwilling to see the end of the boom. Moreover, it is good business to take chances when the possible profit is big enough. The top is never in sight when the vision is vitiated by hope. The average man sees a stock that nobody wanted at $12 or $14 a share suddenly advance to 30, which surely is the top, until it rises to 50. That is absolutely the end of the rise. Then it goes to 60, to 70, to 75. It then becomes a certainty that this stock, which a few weeks ago was selling for less than 15, can't go any higher. But it goes to 80, and to 85. Whereupon the average man, who never thinks of values but of prices, and is not governed in his actions by conditions but by fears, takes the easiest way. He stops thinking that there must be a limit to the advances. That is why those outsiders who are wise enough not to buy at the top make up for it by not taking profits. The big money in booms is always made first by the public on paper. And it remains on paper. 227 Reminiscences of a Stock Operator. Chapter 22. One day Jim Barnes, who not only was one of my principal brokers but an intimate friend as well, called on me. He said he wanted me to do him a great favor. He never before had talked that way, and so I asked him to tell me what the favor was, hoping it was something I could do, for I certainly wished to oblige him. He then told me that his firm was interested in a certain stock. In fact, they had been the principal promoters of the company and had placed the greater part of the stock. Circumstances had arisen that made it imperative for them to market a rather large block. Jim wanted me to undertake to do the marketing for him. The stock was Consolidated Stove. I did not wish to have anything to do with it for various reasons. But Barnes, to whom I was under some obligations, insisted on the personal favor phase of the matter, which alone could overcome my objections. He was a good fellow, a friend, and his firm, I gathered, was pretty heavily involved, so in the end I consented to do what I could. It has always seemed to me that the most picturesque point of difference between the war boom and other booms was the part that was played by a type new in stock market affairs, the boy banker. The boom was stupendous and its origins and causes were plainly to be grasped by all. But at the same time, the greatest banks and trust companies in the country certainly did all they could to help make millionaires overnight of all sorts and conditions of promoters and munition makers. It got so that all a man had to do was to say that he had a friend who was a friend of a member of one of the Allied commissions, and he would be offered all the capital needed to carry out the contracts he had not yet secured. I used to hear incredible stories of clerks becoming presidents of companies doing a business of millions of dollars on money borrowed from trusting trust companies, and of contracts that left a trail of profits as they passed from man to man. A flood of gold was 228. Reminiscences of a stock operator pouring into this country from Europe, and the banks had to find ways of impounding it. The way business was done might have been regarded with misgivings by the old, but there didn't seem to be so many of them about. The fashion for gray-haired presidents of banks was all very well in tranquil times, but youth was the chief qualification in these strenuous times. The banks certainly did make enormous profits. Jim Barnes and his associates, enjoying the friendship and confidence of the youthful president of the Marshall National Bank, decided to consolidate 3 well-known stove companies and sell the stock of the new company to the public that for months had been buying any old thing in the way of engraved stock certificates. One trouble was that the stove business was so prosperous that all 3 companies were actually earning dividends on their common stock for the first time in their history. Their principal stockholders did not wish to part with the control. There was a good market for their stocks on the curb, and they had sold as much as they cared to part with, and they were content with things as they were. Their individual capitalization was too small to justify big market movements, and that is where Jim Barnes' firm came in. It pointed out that the consolidated company must be big enough to list on the stock exchange, where the new shares could be made more valuable than the old ones. It is an old device in Wall Street to change the color of the certificates in order to make them more valuable. Say a stock ceases to be easily vendable at par. Well, sometimes by quadrupling the stock you may make the new shares sell at 30 or 35. This is equivalent to 120 or 144. The old stock, a figure it never could have reached. It seems that Barnes and his associates succeeded in inducing some of their friends who held speculatively some blocks of Gray Stove Company, a large concern, to come into the consolidation on the basis of 4 shares of Consolidated for each share of Gray. Then the Midland and the Western followed their big sister and came in on the basis of share for share. Theirs had been quoted on the curb at around 25 to 30, and the Gray, which was better known and paid dividends, hung around 125. In order to raise the money to buy out those holders who insisted upon selling for cash, and also to provide additional working capital for improvements and promotion expenses, it became necessary to raise a few millions. So Barnes saw the president of his bank, who kindly lent his syndicate $3,500,000. The collateral was 100,000 shares of the newly organized corporation. The 229. Reminiscences of a Stock Operator syndicate assured the president, or so I was told, that the price would not go below 50. It would be a very profitable deal as there was big value there. The promoter's first mistake was in the matter of timeliness. The saturation point for new stock issues had been reached by the market, and they should have seen it. But even then they might have made a fair profit after all if they had not tried to duplicate the unreasonable killings which other promoters had made at the very height of the boom. Now you must not run away with the notion that Jim Barnes and his associates were fools or inexperienced kids. They were shrewd men. All of them were familiar with Wall Street methods, and some of them were exceptionally successful stock traders. But They did rather more than merely overestimate the public's buying capacity. After all, that capacity was something that they could determine only by actual tests. Where they erred more expensively was in expecting the bull market to last longer than it did. I suppose the reason was that these same men had met with such great and particularly with such quick success that they didn't doubt they'd be all through with the deal before the bull market turned. They were all well known and had a considerable following among the professional traders and the wirehouses. The deal was extremely well advertised. The newspapers certainly were generous with their space. The older concerns were identified with the stove industry of America, and their product was known the world over. It was a patriotic amalgamation, and there was a heap of literature in the daily papers about the world conquests. The markets of Asia, Africa and South America were as good as cinched. The directors of the company were all men whose names were familiar to all readers of the financial pages. The publicity work was so well handled, and the promises of unnamed insiders as to what the price was going to do were so definite and convincing that a great demand for the new stock was created. The result was that when the books were closed, it was found that the stock which was offered to the public at $50 a share had been oversubscribed by 25%. Think of it. The best the promoters should have expected was to succeed in selling the new stock at that price after weeks of work and after putting up the price to 75 or higher, in order to average 50. At that, it meant an advance of about 100% in the old prices of the stocks of the constituent companies. That was the crisis, and they did not meet it as it should have been met. It shows you that every business has its own needs. 230. Reminiscences of a stock operator. General wisdom is less valuable than specific savvy. The promoters, delighted by the unexpected oversubscription, concluded that the public was ready to pay any price for any quantity of that stock. And they actually were stupid enough to under-allot the stock. After the promoters made up their minds to be hoggish, they should have tried to be intelligently hoggish. What they should have done, of course, was to allot the stock in full. That would have made them short to the extent of 25% of the total amount offered for subscription to the public, and that, of course, would have enabled them to support the stock when necessary and at no cost to themselves. Without any effort on their part, they would have been in the strong strategic position that I always try to find myself in when I am manipulating a stock. They could have kept the price from sagging, thereby inspiring confidence in the new stock's price stability and in the underwriting syndicate back of it. They should have remembered that their work was not over when they sold the stock offered to the public. That was only a part of what they had to market. They thought they had been very successful, but it was not long before the consequences of their two capital blunders became apparent. The public did not buy any more of the new stock because the entire market developed reactionary tendencies. The insiders got cold feet and did not support Consolidated Stove, and if insiders don't buy their own stock on recessions, who should? The absence of inside support is generally accepted as a pretty good bear tip. There is no need to go into statistical details. The price of Consolidated Stove fluctuated with the rest of the market, but it never went above the initial market quotations, which were only a fraction above 50. Barnes and his friends in the end had to come in as buyers in order to keep it above 40. Not to have supported that stock at the outset of its market career was regrettable. But not to have sold all the stock the public subscribed for was much worse. At all events, the stock was duly listed on the New York Stock Exchange, and the price of it duly kept sagging until it nominally stood at 37. And it stood there because Jim Barnes and his associates had to keep it there because then bank had loaned them $35 a share on 100,000 shares. If the bank ever tried to liquidate that loan, there was no telling what the price would break to. The public that had been eager to buy it at 50 now didn't care for it at 37 and probably wouldn't want it at 27. 231. Reminiscences of a stock operator. As time went on, the bank's excesses in the matter of extensions of credits made people think the day of the boy banker was over. The banking business appeared to be on the ragged edge of suddenly relapsing into conservatism. Intimate friends were now asked to pay off loans, for all the world as though they had never played golf with the president. There was no need to threaten on the lender's part or to plead for more time on the borrowers. The situation was highly uncomfortable for both. The bank, for example, with which my friend Jim Barnes did business, was still kindly disposed. But it was a case of, for heaven's sake, take up that loan or we'll all be in a dickens of a mess. The character of the mess and its explosive possibilities were enough to make Jim Barnes come to me to ask me to sell the 100,000 shares for enough to pay off the bank's $3,500,000 loan. Jim did not now expect to make a profit on that stock. If the syndicate only made a small loss on it, they would be more than grateful. It seemed a hopeless task. The general market was neither active nor strong, though at times there were rallies, when everybody perked up and tried to believe the bull swing was about to resume. The answer I gave Barnes was that I'd look into the matter and let him know under what conditions I'd undertake the work. Well, I did look into it. I didn't analyze the company's last annual report. My studies were confined to the stock market phases of the problem. I was not going to tout the stock for a rise on its earnings or its prospects, but to dispose of that block in the open market. All I considered was what should, could, or might help or hinder me in that task. I discovered for one thing that there was too much stock held by too few people, that is, too much for safety and far too much for comfort. Clifton P. Kane and Company, bankers and brokers, members of the New York Stock Exchange, were carrying 70,000 shares. They were intimate friends of Barnes and had been influential in effecting the consolidation, as they had made a specialty of stove stocks for years. Their customers had been led into the good thing. Ex-Senator Samuel Gordon, who was the special partner in his nephew's firm, Gordon Brothers, was the owner of a second block of 70,000 shares, and the famous Joshua Wolfe had 60,000 shares. This made a total of 200,000 shares of consolidated stove held by this handful of 232. Reminiscences of a stock operator. Veteran Wall Street professionals. They did not need any kind person to tell them when to sell their stock. If I did anything in the manipulating line calculated to bring in public buying, that is to say, if I made the stock strong and active, I could see Kane and Gordon and Wolfe unloading, and not in homeopathic doses either. The vision of their 200,000 shares Niagaraing into the market was not exactly entrancing. Don't forget that the cream was off the bull movement and that no overwhelming demand was going to be manufactured by my operations, however skillfully conducted they might be. Jim Barnes had no illusions about the job he was modestly sidestepping in my favor. He had given me a waterlogged stock to sell on a bull market that was about to breathe its last. Of course, there was no talk in the newspapers about the ending of the bull market, but I knew it, and Jim Barnes knew it, and you bet the bank knew it. Still, I had given Jim my word, so I sent for Kane, Gordon, and Wolfe. Their 200,000 shares was the sword of Damocles. I thought I'd like to substitute a steel chain for the hair. The easiest way, it seemed to me, was by some sort of reciprocity agreement. if they helped me passively by holding off while I sold, the banks, who were old and intimate friends, pleaded with him not to sell any more, and out of regard for them he stopped. Besides which, as I said, he had no market to unload on. The third man was Joshua Wolf. He was probably the best known of all the traders. For 20 years everybody had known him as one of the plungers on the floor. In bidding up stocks or offering them down he had few equals, for 10 or 20,000 shares meant no more to him than 200 or 300. Before I came to New York I had heard of him as a plunger. He was then trailing with a sporting coterie that played a no-limit game, whether on the racetrack or in the stock market. They used to accuse him of being nothing but a gambler, but he had real ability and a strongly developed aptitude for the speculative game. At the same time his reputed indifference to highbrow pursuits made him the hero of numberless anecdotes. One of the most widely circulated of the yarns was that Joshua was a guest at what he called a swell dinner, and by some oversight of the hostess several of the other guests began to discuss literature before they could be stopped. A girl who sat next to Josh and had not heard him use his mouth except for masticating purposes, turned to him and, looking anxious to hear the great financier's opinion, asked him, "Oh, Mr. Wolf, what do you think of Balzac?" Josh politely ceased to masticate, swallowed, and answered, "I never trade in them curb stocks." Such were the three largest individual holders of Consolidated Stove. When they came over to see me I told them that if they formed a syndicate to put up some cash and gave me a call on their stock at a little above the market I would do what I could to make a market. They promptly asked me how much money would be required. I answered, "You've had that stock a long time and you can't do a thing with it. Between the three of you you've got 200,000 shares, and you know very well that you haven't the slightest chance of getting rid of it unless you make a market for it. It's got to be some market to absorb what you've got to give it, and it will be wise to have enough cash to pay for whatever stock it may be necessary to buy at first. It's no use to." 234. Reminiscences of a Stock Operator. Begin and then have to stop because there isn't enough money. I suggest that you form a syndicate and raise 6 millions in cash. Then give the syndicate a call on your 200,000 shares at 40 and put all your stock in escrow. If everything goes well, you chaps will get rid of your dead pet and the syndicate will make some money. As I told you before, there had been all sorts of rumors about my stock market winnings. I suppose that helped, for nothing succeeds like success. At all events, I didn't have to do much explaining to these chaps. They knew exactly how far they'd get if they tried to play a lone hand. They thought mine was a good plan. When they went away, they said they would form the syndicate at once. They didn't have much trouble in inducing a lot of their friends to join them. I suppose they spoke with more assurance than I had of the syndicate's profits. From all I heard, they really believed it, so theirs were no conscienceless tips. At all events, the syndicate was formed in a couple of days. Kane, Gordon, and Wolf gave calls on the 200,000 shares at 40, and I saw to it that the stock itself was put in escrow, so that none of it would come out on the market if I should put up the price. I had to protect myself. More than one promising deal has failed to pan out as expected because the members of the pool or clique failed to keep faith with one another. Dog has no foolish prejudices against eating dog in Wall Street. At the time the Second American Steel and Wire Company was brought out, the insiders accused one another of breach of faith and trying to unload. There had been a gentleman's agreement between John W. Gates and his pals, and the Seligmans and their banking associates. Well, I heard somebody in a broker's office reciting this quatrain, which was said to have been composed by John W. Gates. The tarantula jumped on the centipede's back and chortled with ghoulish glee, "I'll poison this murderous son of a gun. If I don't, he'll poison me." Mind you, I do not mean for one moment to imply that any of my friends in Wall Street would even dream of double-crossing me in a stock deal. But on general principles it is just as well to provide for any and all contingencies. It's plain sense. After Wolf and Kane and Gordon told me that they had formed their syndicate to put up $6 million in cash, there was nothing for me to do but wait for the money to come in. I had urged the vital need of haste. Nevertheless, the money came in driblets. I think it took 4 or 5 installments. I don't know what the reason was, but I remember that I had to send out an SOS call to Wolf and Kane and Gordon. 235. Reminiscences of a Stock Operator. That afternoon I got some big checks that brought the cash in my possession to about $4 million and the promise of the rest in a day or two. It began at last to look as though the syndicate might do something before the bull market passed away. At best it would be no cinch, and the sooner I began work the better. The public had not been particularly keen about new market movements in inactive stocks. But a man could do a great deal to arouse interest in any stock with $4 million in cash. It was enough to absorb all the probable offerings. If time urged, as I had said, there was no sense in waiting for the other $2 million. The sooner the stock got up to 50, the better for the syndicate. That was obvious. The next morning at the opening I was surprised to see that there were unusually heavy dealings in Consolidated Stove. As I told you before, the stock had been waterlogged for months. The price had been pegged at 37, Jim Barnes taking good care not to let it go any lower on account of the big bank loan at 35. But as for going any higher, he'd as soon expect to see the Rock of Gibraltar shimmying across the strait as to see Consolidated Stove do any climbing on the tape. Well, sir, this morning there was quite a demand for the stock, and the price went up to 39. In the first hour of the trading, the transactions were heavier than for the whole previous half year. It was the sensation of the day and affected bullishly the entire market. I heard afterwards that nothing else was talked about in the customers' rooms of the commission houses. I didn't know what it meant, but it didn't hurt my feelings any to see Consolidated Stove perk up. As a rule, I do not have to ask about any unusual movement in any stock, because my friends on the floor, brokers who do business for me, as well as personal friends among the room traders, keep me posted. They assume I'd like to know, and they telephone me any news or gossip they pick up. On this day all I heard was that there was unmistakable inside buying in Consolidated Stove. There wasn't any washing. It was all genuine. The purchasers took all the offerings from 37 to 39, and when importuned for reasons or begged for a tip, flatly refused to give any. This made the wily and watchful traders conclude that there was something doing, something big, when a stock goes up. On buying by insiders who refuse to encourage the world at large to follow suit, the ticker hounds begin to wonder aloud when the official notice will be given out. I didn't do anything myself. I watched and wondered and kept track of the transactions. 236. Reminiscences of a Stock Operator. But on the next day the buying was not only greater in volume but more aggressive in character. The selling orders that had been on the specialist's books for months at above the pegged price of 37 were absorbed without any trouble, and not enough new selling orders came in to check the rise. Naturally, up went the price. It crossed 40. Presently it touched 42. The moment it touched that figure I felt that I was justified in starting to sell the stock. The bank held as collateral. Of course, I figured that the price would go down on my selling, but if my average on the entire line was 37, I'd have no fault to find. I knew what the stock was worth, and I had gathered some idea of the vendability from the months of inactivity. Well, sir, I let them have stock carefully until I had got rid of 30,000 shares. And the advance was not checked. That afternoon I was told the reason for that opportune but mystifying rise. It seems that the floor traders had been tipped off after the close the night before and also the next morning before the opening, that I was bullish as blazes on Consolidated Stove and was going to rush the price right up 15 or 20 points without a reaction, as was my custom, that is, my custom according to people who never kept my books. The tipster in chief was no less a personage than Joshua Wolf. It was his own inside buying that started the rise of the day before. His cronies among the floor traders were only too willing to follow his tip, for he knew too much to give wrong steers to his fellows. As a matter of fact, there was not so much stock pressing on the market as had been feared. Consider that I had tied up 300,000 shares, and you will realize that the old fears had been well founded. It now proved less of a job than I had anticipated to put up the stock. After all, Governor Flower was right. Whenever he was accused of manipulating his firm's specialties, like Chicago Gas, Federal Steel, or BRT, he used to say, "The only way I know of making a stock go up is to buy it." That also was the floor trader's only way, and the price responded. On the next day, before breakfast, I read in the morning papers what was read by thousands and what undoubtedly was sent over the wires to hundreds of branches and out-of-town offices, and that was that Larry Livingston was about to begin active bull operations in Consolidated Stove. The additional details differed. One version had it that I had formed an insider's pool and was going to punish the overextended short interest. Another hinted at dividend announcements in the near future. Another reminded the 237 Reminiscences of a Stock Operator world that what I usually did to a stock I was bullish on was something to remember. Still another accused the company of concealing its assets in order to permit accumulation by insiders. And all of them agreed that the rise hadn't fairly started. By the time I reached my office and read my mail before the market opened, I was made aware that the street was flooded with red-hot tips to buy Consolidated Stove at once. My telephone bell kept ringing, and the clerk who answered the calls heard the same question asked in one form or another 100 times that morning: was it true that Consolidated Stove was going up? I must say that Joshua Wolf and Kane and Gordon, and possibly Jim Barnes, handled that little tipping job mighty well. I had no idea that I had such a following. Why, that morning the buying orders came in from all over the country, orders to buy thousands of shares of a stock that nobody wanted at any price 3 days before. And don't forget that, as a matter of fact, all that the public had to go by was my newspaper reputation as a successful plunger, something for which I had to thank an imaginative reporter or two. Well, sir, on that, the third day of the rise, I sold Consolidated Stove, and on the fourth day and the fifth, and the first thing I knew I had sold for Jim Barnes the 100,000 shares of stock which the Marshall National Bank held as collateral on the $3,500,000 loan that needed paying off. If the most successful manipulation consists of that in which the desired end is gained at the least possible cost to the manipulator, the Consolidated Stove deal is by all means the most successful of my Wall Street career. Why, at no time did I have to take any stock. I didn't have to buy first in order to sell the more easily later on. I did not put up the price to the highest possible point and then begin my real selling. I didn't even do my principal selling on the way down, but on the way up. It was like a dream of paradise to find an adequate buying power created for you without your stirring a finger to bring it about. Particularly when you were in a hurry. I once heard a friend of Governor Flowers say that in one of the great bull leader's operations for the account of a pool in B.R.T., the pool sold 50,000 shares of the stock at a profit, but Flower and Company got commissions on more than 250,000 shares, and W.P. Hamilton says that to distribute 220,000 shares of Amalgamated Copper, James R. Keene must have traded in at least 700,000 shares of the stock during the necessary manipulation. Some commission bill. Think of that and then consider that the only commissions that I had to pay were the commissions on the 238 Reminiscences of a Stock Operator. 100,000 shares I actually sold for Jim Barnes. I call that some saving. Having sold what I had engaged to sell for my friend Jim, and all the money the syndicate had agreed to raise not having been sent in, and feeling no desire to buy back any of the stock I had sold, I rather think I went away somewhere for a short vacation. I do not remember exactly. But I do remember very well that I let the stock alone and that it was not long before the price began to sag. One day, when the entire market was weak, some disappointed bull wanted to get rid of his consolidated stove in a hurry, and on his offerings the stock broke below the call price, which was 40. Nobody seemed to want any of it. As I told you before, I wasn't bullish on the general situation, and that made me more grateful than ever for the miracle that had enabled me to dispose of the 100,000 shares without having to put the price up 20 or 30 points in a week, as the kindly tipsters had prophesied. Finding no support, the price developed a habit of declining regularly until one day it broke rather badly and touched 32. That was the lowest that had ever been recorded for it, for, as you will remember, Jim Barnes and the original syndicate had pegged it at 37. In order not to have their 100,000 shares dumped on the market by the bank. I was in my office that day peacefully studying the tape when Joshua Wolf was announced. I said I would see him. He rushed in. He is not a very large man, but he certainly seemed all swelled up with anger, as I instantly discovered. He ran to where I stood by the ticker and yelled, "Hey? What the devil's the matter?" "Have a chair, Mr. Wolf," I said politely and sat down myself to encourage him to talk calmly. "I don't want any chair. I want to know what it means," he cried at the top of his voice. "What does what mean? What in hell are you doing to it?" "What am I doing to what?" That stock. That stock. 239. Reminiscences of a Stock Operator. "What stock?" I asked him. But that only made him see red, for he shouted, "Consolidated Stove." "What are you doing to it?" "Nothing. Absolutely nothing." "What's wrong?" I said. He stared at me fully 5 seconds before he exploded, "Look at the price. Look at it." He certainly was angry. So I got up and looked at the tape. I said, "The price of it is now 31.1/4. Yeah. 31 and a quarter, and I've got a raft of it. I know you have 60,000 shares. You have had it a long time, because when you originally bought your gray stove." But he didn't let me finish. He said, "But I bought a lot more. Some of it cost me as high as 40. And I've got it yet." He was glaring at me so hostilely that I said, "I didn't tell you to buy it." "You didn't what?" "I didn't tell you to load up with it." "I didn't say you did." "But you were going to put it up." "Why was I?" I interrupted. He looked at me, unable to speak for anger. When he found his voice again, he said, "You were going to put it up. You had the money to buy it." "Yes. But I didn't buy a share, I told him. That was the last straw. You didn't buy a share, and you had over 4 million in cash to buy with? You didn't buy any? 240. Reminiscences of a stock operator. Not a share. I repeated. He was so mad by now that he couldn't talk plainly. Finally he managed to say, "What kind of a game do you call that?" He was inwardly accusing me of all sorts of unspeakable crimes. I sure could see a long list of them in his eyes. It made me say to him, "What you really mean to ask me, Wolf, is why I didn't buy from you above 50 the stock you bought below 40. Isn't that it?" "No, it isn't. You had a call at 40 and 4 million in cash to put up the price with." "Yes, but I didn't touch the money and the syndicate has not lost a cent by my operations." "Look here, Livingston," he began. But I didn't let him say any more. "You listen to me, Wolf. You knew that the 200,000 shares you and Gordon and Kane held were tied up, and that there wouldn't be an awful lot of floating stock to come on the market if I put up the price, as I'd have to do for 2 reasons. The first, to make a market for the stock, and the second, to make a profit out of the call at 40. But you weren't satisfied to get 40 for the 60,000 shares you'd been lugging for months or with your share of the syndicate profits, if any, so you decided to take on a lot of stock under 40 to unload on me when I put the price up with the syndicate's money, as you were sure I meant to do. You'd buy before I did and you'd unload before I did. In all probability I'd be the one to unload on. I suspect you figured on my having to put the price up to 60. It was such a cinch that you probably bought 10,000 shares strictly for unloading purposes, and to make sure somebody held the bag if I didn't, you tipped off everybody in the United States, Canada and Mexico without thinking of my added difficulties. All your friends knew what I was supposed to do. Between their buying and mine you were going to be all hunky. Well, your intimate friends to whom you gave the tip passed it on to their friends after they had bought their lines, and the third stratum of tip takers planned to supply the fourth, fifth, and possibly sixth strata of suckers, so that when I finally came to do some selling I'd find myself anticipated by a few thousands of wise speculators. It was a friendly thought, that notion of yours, Wolf. You can't imagine how surprised I was when Consolidated Stove began to go up before I even 241. Reminiscences of a stock operator. Thought of buying a single share, or how grateful either, when the underwriting syndicate sold 100,000 shares around 40 to the people who were going to sell those same shares to me at 50 or 60. I sure was a sucker not to use the 4 millions to make money for them, wasn't I? The cash was supplied to buy stock with, but only if I thought it necessary to do so. Well, I didn't. Joshua had been in Wall Street long enough not to let anger interfere with business. He cooled off as he heard me, and when I was through talking he said in a friendly tone of voice, "Look here, Larry, old chap, what shall we do?" "Do whatever you please." "Ah, be a sport. What would you do if you were in our place?" "If I were in your place," I said solemnly, "do you know what I'd do?" "What?" "I'd sell out," I told him. He looked at me a moment, and without another word turned on his heel and walked out of my office. He's never been in it since. Not long after that, Senator Gordon also called. He, too, was quite peevish and blamed me for their troubles. Then Kane joined the Anvil chorus. They forgot that their stock had been unsaleable in bulk when they formed the syndicate. All they could remember was that I didn't sell their holdings when I had the syndicate's millions and the stock was active at 44, and that now it was 30 and dull as dishwater. To their way of thinking I should have sold out at a good fat profit. Of course they also cooled down in due time. The syndicate wasn't out a cent and the main problem remained unchanged: to sell their stock. A day or two later they came back and asked me to help them out. Gordon was particularly insistent, and in the end I made them put in their pooled stock at. My fee for my services was to be 1/2 of whatever I got above that figure. The last sale had been at about 242. Reminiscences of a stock operator. There I was with their stock to liquidate. Given general market conditions and specifically the behavior of Consolidated Stove, there was only one way to do it, and that was, of course, to sell on the way down and without first trying to put up the price. And I certainly would have got stock by the ream on the way up. But on the way down I could reach those buyers who always argue that a stock is cheap when it sells 15 or 20 points below the top of the movement, particularly when that top is a matter of recent history. A rally is due, in their opinion, after seeing Consolidated Stove sell up to close to 44. It sure looked like a good thing below 30. It worked out as always. Bargain hunters bought it in sufficient volume to enable me to liquidate the pool's holdings. But do you think that Gordon or Wolf or Kane felt any gratitude? Not a bit of it. They are still sore at me, or so their friends tell me. They often tell people how I did them. They cannot forgive me for not putting up the price on myself, as they expected. As a matter of fact, I never would have been able to sell the bank's 100,000 shares if Wolf and the rest had not passed around those red-hot bull tips of theirs. If I had worked as I usually do, that is, in a logical, natural way, I would have had to take whatever price I could get. I told you we ran into a declining market. The only way to sell on such a market is to sell not necessarily recklessly but really regardless of price. No other way was possible, but I suppose they do not believe this. They are still angry. I am not. Getting angry doesn't get a man anywhere. More than once it has been borne in on me that a speculator who loses his temper is a goner. In this case there was no aftermath to the grouches. But I'll tell you something curious. One day Mrs. Livingston went to a dressmaker who had been warmly recommended to her. The woman was competent and obliging and had a very pleasing personality. At the 3rd or 4th visit, when the dressmaker felt less like a stranger, she said to Mrs. Livingston, "I hope Herr Livingston puts up Consolidated Stove soon. We have some that we bought because we were told he was going to put it up, and we'd always heard that he was very successful in all his deals. I tell you, it isn't pleasant to think that innocent people may have lost money following a tip of that sort. Perhaps you understand why I never give any myself." That dressmaker made me feel that in the matter of grievances I had a real one against Wolf. 243. Reminiscences of a Stock Operator. Chapter 23. Speculation in stocks will never disappear. It isn't desirable that it should. It cannot be checked by warnings as to its dangers. You cannot prevent people from guessing wrong, no matter how able or how experienced they may be. Carefully laid plans will miscarry, because the unexpected and even the unexpectable will happen. Disaster may come from a convulsion of nature or from the weather, from your own greed or from some man's vanity, from fear or from uncontrolled hope. But apart from what one might call his natural foes, a speculator in stocks has to contend with certain practices or abuses that are indefensible morally as well as commercially. As I look back and consider what were the common practices 25 years ago, when I first came to Wall Street, I have to admit that there have been many changes for the better. The old-fashioned bucket shops are gone, though bucketeering brokerage Houses still prosper at the expense of men and women who persist in playing the game of getting rich quick. The stock exchange is doing excellent work not only in getting after these out-and-out swindlers but in insisting upon strict adherence to its rules by its own members. Many wholesome regulations and restrictions are now strictly enforced. But there is still room for improvement. The ingrained conservatism of Wall Street rather than ethical callousness is to blame for the persistence of certain abuses. Difficult as profitable stock speculation always has been, it is becoming even more difficult every day. It was not so long ago when a real trader could have a good working knowledge of practically every stock on the list. In 1901, when J. P. Morgan brought out the United States Steel Corporation, which was merely a consolidation of lesser consolidations, most of which were less than 2 years old, the stock exchange had 275 stocks on its list and about 100 in its unlisted department, and this included a lot that a chap didn't have to know anything about because they were small issues or inactive by reason of being minority or guaranteed stocks and therefore lacking in speculative. 244. Reminiscences of a stock operator. Attractions. In fact, an overwhelming majority were stocks in which there had not been a sale in years. Today there are about 900 stocks on the regular list, and in our recent active markets about 600 separate issues were traded in. Moreover, the old groups or classes of stocks were easier to keep track of. They not only were fewer but the capitalization was smaller, and the news a trader had to be on the lookout for did not cover so wide a field. But today, a man is trading in everything. Almost every industry in the world is represented. It requires more time and more work to keep posted, and to that extent stock speculation has become much more difficult for those who operate intelligently. There are many thousands of people who buy and sell stocks speculatively, but the number of those who speculate profitably is small. As the public always is in the market to some extent, it follows that there are losses by the public all the time. The speculators' deadly enemies are ignorance, greed, fear, and hope. All the statute books in the world and all the rules of all the exchanges on earth cannot eliminate these from the human animal. Accidents which not carefully conceived plans sky high also are beyond regulation by bodies of cold-blooded economists or warm-hearted philanthropists. There remains another source of loss, and that is deliberate misinformation as distinguished from straight tips. And because it is apt to come to a stock trader variously disguised and camouflaged, it is the more insidious and dangerous. The average outsider, of course, trades either on tips or on rumors, spoken or printed, direct or implied. Against ordinary tips you cannot guard. For instance, a lifelong friend sincerely desires to make you rich by telling you what he has done, that is, to buy or sell some stock. His intent is good. If the tip goes wrong, what can you do? Also against the professional or crooked tipster, the public is protected to about the same extent that he is against gold bricks or wood alcohol. But against the typical Wall Street rumors, the speculating public has neither protection nor redress. Wholesale dealers in securities, manipulators, pools, and individuals resort to various devices to aid them in disposing of their surplus holdings at the best possible prices. The circulation of bullish items by the newspapers and the tickers is the most pernicious of all. Get the slips of the financial news agencies any day, and it will surprise you to see how many statements of an implied semi-official nature they print. The authority is some. 245. Reminiscences of a stock operator. Leading insider or a prominent director or a high official or someone in authority who presumably knows what he is talking about. Here are today's slips. I pick an item at random. Listen to this. A leading banker says it is too early yet to expect a declining market. Did a leading banker really say that? And if he said it, why did he say it? Why does he not allow his name to be printed? Is he afraid that people will believe him if he does? Here is another one about a company the stock of which has been active this week. This time the man who makes the statement is a prominent director. Now which, if any, of the company's dozen directors is doing the talking? It is plain that by remaining anonymous nobody can be blamed for any damage that may be done by the statement. Quite apart from the intelligent study of speculation everywhere, the trader in stocks must consider certain facts in connection with the game in Wall Street. In addition to trying to determine how to make money, one must also try to keep from losing money. It is almost as important to know what not to do as to know what should be done. It is therefore well to remember that manipulation of some sort enters into practically all advances in individual stocks, and that such advances are engineered by insiders with one object in view and one only, and that is to sell at the best profit possible. However, the average broker's customer believes himself to be a businessman from Missouri if he insists upon being told why a certain stock goes up. Naturally, the manipulators explain the advance in a way calculated to facilitate distribution. I am firmly convinced that the public's losses would be greatly reduced if no anonymous statements of a bullish nature were allowed to be printed. I mean statements calculated to make the public buy or hold stocks. The overwhelming majority of the bullish articles printed on the authority of unnamed directors or insiders convey unreliable and misleading impressions to the public. The public loses many millions of dollars every year by accepting such statements as semi-official and therefore trustworthy. Say, for example, that a company has gone through a period of depression in its particular line of business. The stock is inactive. The quotation represents the general and presumably accurate belief of its actual value. If the stock were too cheap at that level, somebody would know it and buy it, and it would advance. If too dear, somebody would know enough to sell it and the price would decline. As nothing happens one way or 246. Reminiscences of a stock operator. Another, nobody talks about it or does anything. The turn comes in the line of business the company is engaged in. Who are the first to know it, the insiders or the public? You can bet it isn't the public. What happens next? Why, if the improvement continues, the earnings will increase and the company will be in position to resume dividends on the stock, or, if dividends were not discontinued, to pay a higher rate. That is, the value of the stock will increase. Say that the improvement keeps up. Does the management make public that glad fact? Does the president tell the stockholders? Does a philanthropic director come out with a signed statement for the benefit of that part of the public that reads the financial page in the newspapers and the slips of the news agencies? Does some modest insider pursuing his usual policy of anonymity come out with an unsigned statement to the effect that the company's future is most promising? Not this time. Not a word is said by anyone, and no statement whatever is printed by newspapers or tickers. The value-making information is carefully kept from the public while the now taciturn prominent insiders go into the market and buy all the cheap stock they can lay their hands on. As this well-informed but unostentatious buying keeps on, the stock rises. The financial reporters, knowing that the insiders ought to know the reason for the rise, ask questions. The unanimously anonymous insiders unanimously declare that they have no news to give out. They do not know that there is any warrant for the rise. Sometimes they even state that they are not particularly concerned with the vagaries of the stock market or the actions of stock speculators. The rise continues, and there comes a happy day when those who know have all the stock they want or can carry. The street at once begins to hear all kinds of bullish rumors. The tickers tell the traders on good authority that the company has definitely turned the corner. The same modest director who did not wish his name used when he said he knew no warrant for the rise in the stock is now quoted, of course not by name, as saying that the stockholders have every reason to feel greatly encouraged over the outlook. Urged by the deluge of bullish news items, the public begins to buy the stock. These purchases help to put the price still higher. In due course, the predictions of the uniformly unnamed directors come true and the company resumes dividend payments, or increases the rate, as the case may be. With that, the bullish items multiply. They not only are more numerous than ever but much more enthusiastic. A leading director asked point blank. 247. Reminiscences of a stock operator. For a statement of conditions, informs the world that the improvement is more than keeping up. A prominent insider, after much coaxing, is finally induced by a news agency to confess that the earnings are nothing short of phenomenal. A well-known banker, who is affiliated in a business way with the company, is made to say that the expansion in the volume of sales is simply unprecedented in the history of the trade. If not another order came in, the company would run night and day for heaven knows how many months. A member of the finance committee, in a double-leaded manifesto, expresses his astonishment at the public's astonishment over the stock's rise. The only astonishing thing is the stock's moderation in the climbing line. Anybody who will analyze the forthcoming annual report can easily figure how much more than the market price the book value of the stock is. But in no instance is the name of the communicative philanthropist given. As long as the earnings continue good and the insiders do not discern any sign of a let-up in the company's prosperity, they sit on the stock they bought at the low prices. There is nothing to put the price down, so why should they sell? But the moment there is a turn for the worse in the company's business, what happens? Do they come out with statements or warnings, or the faintest of hints? Not much. The trend is now downward. Just as they bought without any flourish of trumpets when the company's business turned for the better, they now silently sell. On this inside selling, the stock naturally declines. Then the public begins to get the familiar explanations. A leading insider asserts that everything is okay and the decline is merely the result of selling by bears who are trying to affect the general market. If on one fine day, after the stock has been declining for some time, there should be a sharp break, the demand for reasons or explanations becomes clamorous. Unless somebody says something, the public will fear the worst. So the news tickers now print something like this. When we asked a prominent director of the company to explain the weakness in the stock, he replied that the only conclusion he could arrive at was that the decline today was caused by a bear drive. Underlying conditions are unchanged. The business of the company was never better than at present. And the probabilities are that unless something entirely unforeseen happens in the meanwhile, there will be an increase in the rate at the next dividend meeting. The bear party in the market has become aggressive and the weakness in the stock was clearly a raid intended to dislodge weakly held stock. The new stickers, wishing to give good. 248. Reminiscences of a stock operator. Measure, as likely as not, will go on to state that they are reliably informed that most of the stock bought on the day's decline was taken by inside interests and that the bears will find that they have sold themselves into a trap. There will be a day of reckoning. In addition to the losses sustained by the public through believing bullish statements and buying stocks, there are the losses that come through being dissuaded from selling out. The next best thing to having people buy the stock the prominent insider wishes to sell is to prevent people from selling the same stock when he does not wish to support or accumulate it. What is the public to believe after reading the statement of the prominent director? What can the average outsider think? Of course, that the stock should never have gone down, that it was forced down by bear selling, and that as soon as the bears stop, the insiders will engineer a punitive advance during which the shorts will be driven to cover at high prices. The public properly believes this because it is exactly what would happen if the decline had in truth been caused by a bear raid. The stock in question, notwithstanding all the threats or promises of a tremendous squeeze of the overextended short interest, does not rally. It keeps on going down. It can't help it. There has been too much stock fed to the market from the inside to be digested. And this inside stock that has been sold by the prominent directors and leading insiders becomes a football among the professional traders. It keeps on going down. There seems to be no bottom for it. The insiders, knowing that trade conditions will adversely affect the company's future earnings, do not dare to support that stock until the next turn for the better in the company's business. Then there will be inside buying and inside silence. I have done my share of trading and have kept fairly well posted on the stock market for many years, and I can say that I do not recall an instance when a bear raid caused a stock to decline extensively. What was called bear raiding was nothing but selling based on accurate knowledge of real conditions. But it would not do to say that the stock declined on inside selling or on inside non-buying. Everybody would hasten to sell, and when everybody sells and nobody buys, there is the dickens to pay. The public ought to grasp firmly this one point, that the real reason for a protracted decline is never bear raiding. When a stock keeps on going down, you can bet there is something wrong with it, either with the market for it or with the company. If the decline 249 Reminiscences of a stock operator were unjustified, the stock would soon sell below its real value, and that would bring in buying that would check the decline. As a matter of fact, the only time a bear can make big money selling a stock is when that stock is too high, and you can gamble your last cent on the certainty that insiders will not proclaim that fact to the world. Of course, the classic example is the New Haven. Everybody knows today what only a few knew at the time. The stock sold at $255 in 1902 and was the premier railroad investment of New England. A man in that part of the country measured his respectability and standing in the community by his holdings of it. If somebody had said that the company was on the road to insolvency, he would not have been sent to jail for saying it. They would have clapped him in an insane asylum with other lunatics. But when a new and aggressive president was placed in charge by Mr. Morgan and the debacle began, it was not clear from the first that the new policies would land the road where it did. But as property after property began to be saddled in the consolidated road at inflated prices, a few clear-sighted observers began to doubt the wisdom of the Mellon policies. A trolley system was bought for $2 million and sold to the New Haven for $10 million, whereupon a reckless man or two committed lèse majesté by saying that the management was acting recklessly, hinting that not even the New Haven could stand such extravagance was like impugning the strength of Gibraltar. Of course, the first to see breakers ahead were the insiders. They became aware of the real condition of the company, and they reduced their holdings of the stock. On their selling as well as on their non-support, the price of New England's gilt-edged railroad stock began to yield. Questions were asked, and explanations were demanded as usual. And the usual explanations were promptly forthcoming. Prominent insiders declared that there was nothing wrong that they knew of, and that the decline was due to reckless Bear selling. So the investors of New England kept their holdings of New York, New Haven and Hartford stock. Why shouldn't they? Didn't insiders say there was nothing wrong in bear selling? Didn't dividends continue to be declared and paid? In the meantime, the promised squeeze of the bears did not come, but new low records did. The insider selling became more urgent and less disguised. Nevertheless, public spirited men in Boston were denounced as stock jobbers and demagogues for demanding a genuine explanation for the stock's deplorable decline that meant appalling losses to everybody in New England who had wanted a safe investment and a steady dividend payer. 250. Reminiscences of a stock operator. That historic break from $255 to $12 a share never was and never could have been a bear drive. It was not started and it was not kept up by bear operations. The insiders sold right along and always at higher prices than they could have done if they had told the truth or allowed the truth to be told. It did not matter whether the price was 250 or 200. Or 150 or 100 or 50 or 25, it still was too high for that stock, and the insiders knew it, and the public did not. The public might profitably consider the disadvantages under which it labors when it tries to make money buying and selling the stock of a company, concerning whose affairs only a few men are in position to know the whole truth. The stocks which have had the worst breaks in the past 20 years did not decline on bear rating. But the easy acceptance of that form of explanation has been responsible for losses by the public amounting to millions upon millions of dollars. It has kept people from selling who did not like the way his stock was acting and would have liquidated if they had not expected the price to go right back after the bears stopped their rating. I used to hear Keene blamed in the old days. Before him, they used to accuse Charlie Woerschoffer or Addison Kamak. Later on, I became the stock excuse. I recall the case of Intervale Oil. There was a pool in it that put the stock up and found some buyers on the advance. The manipulators ran the price to 50. There the pool sold. And there was a quick break. The usual demand for explanations followed. Why was Intervale so weak? Enough people asked this question to make the answer important. News. One of the financial news tickers called up the brokers who knew the most about Intervale Oil's advance and ought to be equally well posted as to the decline. What did these brokers, members of the bull pool, say when the news agency asked them for a reason that could be printed and sent broadcast over the country? Why, that Larry Livingston was raiding the market. And that wasn't enough. They added that they were going to get him. But of course, the Intervale pool continued to sell. The stock only stood then about $12 a share, and they could sell it down to 10 or lower, and their average selling price would still be above cost. It was wise and proper for insiders to sell on the decline. But for outsiders who had paid 35 or 40, it was a different matter. Reading what the tickers printed, their outsiders held on and waited for Larry Livingston to get what was coming to him at the hands of the indignant inside pool. In a bull market, and particularly in booms, the public at first makes money which it later 251. Reminiscences of a stock operator loses simply by overstaying the bull market. This talk of bear raids helps them to overstay. The public should beware of explanations that explain only what unnamed insiders wish the public to believe. 252. Reminiscences of a stock operator. Chapter 24. The public always wants to be told. That is what makes tip-giving and tip-taking universal practices. It is proper that brokers should give their customers trading advice through the medium of their market letters as well as by word of mouth. But brokers Should not dwell too strongly on actual conditions because the course of the market is always from 6 to 9 months ahead of actual conditions. Today's earnings do not justify brokers in advising their customers to buy stocks unless there is some assurance that 6 or 9 months from today the business outlook will warrant the belief that the same rate of earnings will be maintained. If on looking that far ahead you can see reasonably clearly that conditions are developing which will change the present actual power, the argument about stocks being cheap today will disappear. The trader must look far ahead, but the broker is concerned with getting commissions now, hence the inescapable fallacy of the average market letter. Brokers make their living out of commissions from the public, and yet they will try to induce the public through their market letters or by word of mouth to buy the same stocks in which they have received selling orders from insiders or manipulators. It often happens that an insider goes to the head of a brokerage concern and says, "I wish you'd make a market in which to dispose of 50,000 shares of my stock." The broker asks for further details. Let us say that the quoted price of that stock is 50. The insider tells him, "I will give you calls on 5000 shares at 45 and 5,000 shares every point up for the entire 50,000 shares. I also will give you a put on 50,000 shares at the market." Now, this is pretty easy money for the broker, if he has a large following, and of course, this is precisely the kind of broker the insider seeks. A house with direct wires to branches and connections in various parts of the country can usually get a large 253. Reminiscences of a stock operator. Following in a deal of that kind. Remember that in any event the broker is playing absolutely safe by reason of the put. If he can get his public to follow, he will be able to dispose of his entire line at a big profit in addition to his regular commissions. I have in mind the exploits of an insider who is well known in Wall Street. He will call up the head customer's man of a large brokerage house. At times he goes even further and calls up one of the junior partners of the firm. He will say something like this. Say, "Old man, I want to show you that I appreciate what you have done for me at various times. I am going to give you a chance to make some real money. We are forming a new company to absorb the assets of one of our companies and will take over that stock at a big advance over present quotations. I'm going to send in to you 500 shares of Bantam Shops at $65. The stock is now quoted at 72. The grateful insider tells the thing to a dozen of the headmen in various big brokerage houses. Now, since these recipients of the insider's bounty are in Wall Street, what are they going to do when they get that stock that already shows them a profit? Of course, advise every man and woman they can reach to buy that stock. The kind donor knew this. They will help to create a market in which the kind insider can sell his good things at high prices to the poor public. There are other devices of stock selling promoters that should be barred. The exchanges should not allow trading in listed stocks that are offered outside to the public on the partial payment plan. To have the price officially quoted gives a sort of sanction to any stock. Moreover, the official evidence of a free market, and at times the difference in prices, is all the inducement needed. Another common selling device that costs the unthinking public many millions of dollars and sends nobody to jail because it is perfectly legal, is that of increasing the capital stock exclusively by reason of market exigencies. The process does not really amount to much more than changing the color of the stock certificates. The juggling whereby 2 or 4 or even 10 shares of new stock are given in exchange for one of the old is usually prompted by a desire to make the old merchandise more easily vendable. The old price was $1 per pound package and hard to move. At 25 cents for a 254 Reminiscences of a stock operator. Quarter-pound box, it might go better, and perhaps at 27 or 30 cents. Why does not the public ask why the stock is made easy to buy? It is a case of the Wall Street philanthropist operating again, but the wise trader bewares of the Greek sparing gifts. It is all the warning needed. The public disregards it and loses millions of dollars annually. The law punishes whoever originates or circulates rumors calculated to affect adversely the credit or business of individuals or corporations, that is, that tend to depress the values of securities by influencing the public to sell. Originally, the chief intention may have been to reduce the danger of panic by punishing anyone who doubted aloud the solvency of banks in times of stress. But of course, it serves also to protect the public against selling stocks below their real value. In other words, the law of the land punishes the disseminator of bearish items of that nature. How is the public protected against the danger of buying stocks above their real value? Who punishes the distributor of unjustified bullish news items? Nobody, and yet the public loses more money buying stocks on anonymous inside advice when they are too high than it does selling out stocks below their value as a consequence of bearish advice during so-called raids. If a law were passed that would punish bull liars as the law now punishes bear liars, I believe the public would save millions. Naturally, promoters, manipulators, and other beneficiaries of anonymous optimism will tell you that anyone who trades on rumors and unsigned statements has only himself to blame for his losses. One might as well argue that anyone who is silly enough to be a drug addict is not entitled to protection. The stock exchange should help. It is vitally interested in protecting the public against unfair practices. If a man in position to know wishes to make the public accept his statements of fact or even his opinions, let him sign his name. Signing bullish items would not necessarily make them true, but it would make the insiders and directors more careful. The public ought always to keep in mind the elementals of stock trading. When a stock is going up, no elaborate explanation is needed as to why it is going up. It takes 255 Reminiscences of a stock operator. Continuous buying to make a stock keep on going up. As long as it does so, with only small and natural reactions from time to time, it is a pretty safe proposition to trail along with it. But if after a long steady rise a stock turns and gradually begins to go down, with only occasional small rallies, it is obvious that the line of least resistance has changed from upward to downward. Such being the case, why should anyone ask for explanations? There are probably very good reasons why it should go down, but these reasons are known only to a few people who either keep those reasons to themselves, or else actually tell the public that the stock is cheap. The nature of the game as it is played is such that the public should realize that the truth cannot be told by the few who know. Many of the so-called statements attributed to insiders or officials have no basis in fact. Sometimes the insiders are not even asked to make a statement, anonymous or signed. These stories are invented by somebody or other who has a large interest in the market. At a certain stage of an advance in the market price of a security, the big insiders are not averse to getting the help of the professional element to trade in that stock. But while the insider might tell the big plunger the right time to buy, you can bet he will never tell when is the time to sell. That puts the big professional in the same position as the public, only he has to have a market big enough for him to get out on. Then is when you get the most misleading information. Of course, there are certain insiders who cannot be trusted at any stage of the game. As a rule, the men who are at the head of big corporations may act in the market upon their inside knowledge, but they don't actually tell lies. They merely say nothing, for they have discovered that there are times when silence is golden. I have said many times and cannot say it too often that the experience of years as a stock operator has convinced me that no man can consistently and continuously beat the stock market, though he may make money in individual stocks on certain occasions. No matter how experienced a trader is, the possibility of his making losing plays is always present. Because speculation cannot be made 100% safe. Wall Street professionals know that acting on inside tips will break a man more quickly than famine, pestilence, crop failures, political readjustments, or what might be called normal accidents. There is no asphalt boulevard to success in Wall Street or anywhere else. Why additionally block traffic? The end.